10th of September, and it's bright and sunny, and we have the wonderful Luke Moore back with us.
Good morning.
Tube strike couldn't hold him back.
The tube strike could not hold me back. Yeah, there's a premium at these times of day when you live close to the office, as me and Ronnie have just found out. There's a premium on our time. You know, I can walk in. It's super easy. So therefore, you'll be seeing me more this week, I think.
We love it. We love
to get
it.
in.
Always a pleasure having you on. Also, did Ronnie tell you it yesterday? Mm-hmm. He actually woke up and thought, "Oh, tube strike." What? And then he went Lime bike. So when he came in yesterday, he had Lime bike hair.
I'm trying to think. I've got well, yeah, I don't know what's happened to my hair this morning. It's a bit shiny.
It's good. It's looking good.
Like I've got wet look gel in. I'm not sure.
Do you have wet look gel?
I do not have wet look gel. I'm not like back in what? You would have to be like 8, 9 years old. Do you remember the kids kind of? Well, it would have
Brill
been
cream.
15.
Brill cream?
Yeah, not quite brill cream, but the old just up at the front. Everything else was flat, just up at the front. That was kind of my youth.
And short sides.
Short sides always. Oh yeah, always short sides.
Love short sides. Well, we have tons of people already on the chat. Gavin Ackers, good morning to you. Steve CDR as well. Welcome, Steve. I'm on the ball this morning for a change. Good to see you back, Steve. You're always on the ball. What are you talking about? Shrimp Fred, good day to you. Friar Tuck and Neil away from the numbers. Welcome, Andrew. Good morning. Gold continues to shine. That is right. And I have a special guest today, Peter Hambro, chairman of Hambro Mining. Let's put up the chart if we can in the gallery. He is going to be with us today, of course, from the banking dynasty and also from the mining dynasty.
Wow. Nice.
And he is, of course, a gold trader. He'll be joining us today. He's well known amongst those and a permanent fixture at Resourcing Tomorrow,
Fantastic.
Otherwise known as Mines and Money.
Mines and Money. Do you think he's going to be line biking across the city today, or?
No, I think the Bentley will be out.
The Bentley. Oh, fantastic. Well, of course it will be.
He is. He's giving us a very, very special chunk of his time, because I did say, look, I know it's Torrid Tuesday. In case you missed it, the term for yesterday,
Torrid Tuesday,
in the city was Torrid Tuesday.
Yeah.
I know this because right under our office, Cannon Street was cage closed. Like, I thought maybe I could sneak into that, that little Costa in there for a quick cup of coffee. No, it was
nothing.
Caged closed. Good morning, Julian, Donny One, and R Sachs as well. R Sachs will be sending you emails later on from the DSEI. Boise, Novo, down 5% on the news.
We'll have to talk about that in a second, won't we?
We are talking about that in a second. Let's get the coming up first. Here we are.
Let's rattle through. So, as we've already alluded to, I'll be in here till just before 8:30. We'll have a little look at fast markets at 8:15 once we get through the opening bell. And then the main man, Axel Rudolph, he's going to be in on charting crypto from 8:35.
And it'll be a really interesting space too, because those of you that watch that space, Ethereum's just got a lift recently, and some of the alts as well. I'll take you through opening bell, and then we will have Commodity Corner as promised with Peter Hambro. All your questions for Peter, please slam them here and slam the like and subscribe button, because it's only taken me 4 months to get Peter in. This is just aligning the diaries, baby.
Finally, the stars have aligned. Hey, I tell you what, since I've been off, we've got these nice uplighters in here now.
Yeah.
I'm just looking at the back. This looks really nice.
Right?
It's getting better. Look at it.
Oh, doesn't it? Tell us if you like it. We've got many different colors, as you can see here.
Okay, so we're on a yellow now. What else have we got?
So yesterday I tried a sort of magenta hue.
Okay.
And there's also a blue hue, there's a green hue, there's a white hue.
Are we going to do it depending on whether the markets are up or down? Should we have green for big days? We closed at record highs last night. Should we be looking for kind of a green, kind of let's go?
Yeah.
In the morning when it's bad, we red. We
Red,
can
yeah,
maybe.
possibly that's a good idea. We even had lots of the gallery people and producer Phil in here lighting me the other day, and then I could hear in my ear, ooh, that's a Halloween special.
Could do a Halloween special.
Yeah.
We're kind of Halloween-y right now. This is kind of autumnal
It is.
kind of vibes. I like
But
it.
although like a kind of late in the afternoon, it does suddenly switch to, it tries to go back to summer again, doesn't it?
Well, yeah, this is the first day I've worn a jumper, so technically, if you want to use the if you want to use the changing of the weather indicator as per my wardrobe, today's the first day wearing a jumper coming into the office.
The weather on the markets since I last saw you, I mean, right? The
Good.
slow, yeah. We're
Yeah.
still seeing risk on relatively. We're still seeing a lot of enthusiasm despite that weaker than expected numbers from China, and also some slightly concerning numbers on the US jobs report. It just seems like nothing's holding this market back.
Yeah.
What do you think?
Yeah. I mean, the Chinese data. So we had Chinese inflation overnight. It came in slightly lower than expected, so it's arguably more deflationary over in China. Didn't seem to rattle markets overnight. So from what I can see, we've got most indices pointing higher so far this morning. FTSE up 0.2, DAX indicating up 0.5%, and the US futures all indicating up around 0.3, apart from the Dow, which is flat. So we've had, you've got indices at all-time highs, and we know that it's the AI trade. We know that it's big tech that is driving this. And we had another indication of that last night. Oracle. Did we see those move last night?
Yeah, let's cover that in overnight action.
Okay, overnight action. Let's go.
Let's go. Right, welcome back, friends, to overnight action. Let's cover Oracle first, because you just talked about it.
Correct. Well, if you want to bring the chart
I'll
up
bring
so you
the
can
chart
have a
up,
little look. So they came out with their numbers last night, and they jumped 28%. And of course, you can now trade this on the platforms 24 hours. So you are still pricing right now, and it's holding on to those moves. I mean, it was a huge move. If the gains hold, I see that it's about $190 billion in market value they're adding. And ultimately, where did this drive? So huge bookings. Bearing in mind, Oracle are a cloud computing business, cloud infrastructure. So this is continuing that theme of AI. Typically, though, not a name that's been that trendy. You wouldn't have seen. I've not seen clients kind of flying into Oracle as a result. It's not huge.
They're always talking about the Metas. They're talking about the Nvidias, the
Exactly.
Palantirs, but not Oracle, right?
Yeah, but I mean, just to run through these. So they booked $455 billion, which has been 4 times higher year on year. So that's a huge amount of business. They've signed 4 multi-billion-dollar contracts with 3 new customers in the first quarter. They have done a deal with OpenAI as part of Stargate. So they're getting 4.5 gigawatts of data center capacity built. And it was the real big one was their revenue outlook. So I've got a chart here. If you want to pop my screen on, gents. Here we go. So it's I think whenever you see a stock move quite like that, it's all about the expectation. So this is a chart. The yellow here is indicating what Wall Street's earnings for their infrastructure sales before last night. So you've got FY26, 27, 28, 9, and 30, and the grey bars there are the upside. And so you can just see, it's going to hit 144 billion, as you can see, by FY30, when the market was previously looking for something like, by 2030, it was looking at somewhere like 75. This year, we were looking at 18 billion. So if the market's going to look for $144 billion in revenue within the next, 4 or 5 years, that is a huge upgrade.
It is.
So massively confirming that, this OPEX and CAPEX shift in the tech space is continuing. So it's good. Look, Deutsche Bank have come out and said that that's a seismic shift in computing power. A lot of analysts have said that this is a huge surprise, but a very good surprise. And it's had its own ripple effect. Nvidia's up.
Yeah.
A load of the chip suppliers are rallying overnight. So one suspects that if this can hold, you're going to see a continuation today. So it's going to be a space to watch.
Listen, what I love about this as well, friends, is that, you heard Julian Wheeler in this room talking about this week. It's one thing talking about all the hardware and what we've seen so far with the chips and, building of servers. It's a bit like this new studio. You're building the studio, but you still need to kit it out with software, with cloud computing, right? With all that good stuff. And now maybe we're seeing that cycle turn into the software side of things. Just wanting to give you the edge here too. So 2 things Here is the Ange edge, people. You're hearing it here first. Oracle, fantastic move there. But do be aware that it's one of those stocks you have to understand the personality, right? I'm sure you talk about this with your clients all the time. Every different stock has, or financial instrument has, a different personality. Commodities have a different personality, right? Oracle has its distinct personality. There are, it does tend to obey, not always, but sometimes from a technical viewpoint, I've circled it here for you. It does obey big legs up. I've looked at that oval shape there, which I've shown you, and you have to pay attention because at some point you will get this lift shaft down. Right. And it's just a bit of a correction. This time maybe it might not, be that way because the numbers, as you said, is such a big surprise to the upside. But here's the second edge, people. If Oracle is happy, then SAP is also likely to be happy. Right? So keep an eye on that one on the open and early trade, because if Oracle is boosting its 2026 cloud outlook, people, then it's going to be good for the likes of SAP. We've known for ages that SAP has banked on cloud and many other cloud plays. And already I'm getting messages on my phone indicating, pinging this morning, that we could see a bounce for SAP.
Yep. Well, let's see what they do at the open. Should we go to something that's not so good? Should we go to Novo?
Yes.
Let's have a look at Novo.
Yeah, I'm glad you were talking about this morning because I've got a position in Eli.
Nice. Well, I've just got back from 4 days around the Basque region, so if anyone needs a little dose of Eli Lilly or Nordisk, it's me right now.
Yeah, this says photos will make you put on weight. You look amazing.
Yeah, blimey. Right, well,
let's go Novo.
Speaking of losing things, Novo losing jobs and percentage points off its share price this morning. They've cut 9,000, or they're aiming to cut 9,000 jobs globally. So that is a mess of a chart, Ange. What on earth have you got going on there?
Yeah, so we were talking about Novo yesterday. It's a clear downtrend.
Is that an Ichimoku?
That is an Ichimoku. Well done, you.
Can you give me the I'm an idiot, I don't understand how Ichimoku clouds work?
You're so clever. I like things simple. That's
well, you're kind of doing your exams. This is you know what this means.
Very simple. It just gives you a forward view. It's like a heads-up display in your driving. If the price action is below the cloud there, can you see? If it's below, it's that's negative. If it's above, that is positive. Yes?
Okay.
So if it crosses into the cloud, that's kind of like heads-up display.
Something's happening.
Something's happening. Time to relook at this trade. So I've been using this to illustrate why Novo has been such a short, and it's obeyed all the signals pointing at further downward momentum. I've even put this channal trend line there, so it makes it easy.
This is daily candles as well, isn't it?
This is daily. But also, I always like looking at 3. You don't ever try, because everything about technicals, I always say, is it's like you don't trade on one thing, you trade on many, and also don't forget the fundamentals.
Sure.
And just like a well-made samurai sword, each little layer gives you that edge.
Ange's edge.
Ange's edge.
Ange's edge.
So if you look at the weekly chart as well, obviously those lines there for me is just a heads-up display that it's still in that, that downtrend. Can you see there? And it is still in that downtrend. So back to the daily chart. Okay. Take us through the job cuts.
So this is the exact opposite to Oracle. So they've slashed their profit targets. So if you cast your mind back to February, they were targeting 27% operating profit growth. They're now only expecting between 4 to 10%, which is a huge write-down. On a stock as big as this, it's a huge, huge write-down. So therefore, they've got to go for cost savings, right? If the profits are falling, you're going to have to cut costs somewhere else to try and maintain. So they're targeting 8 billion Danish kroner of cost savings by the end of next year. That is $1.3 billion, which equates to cutting 9,000 jobs globally. 11% of the workforce. Denmark getting the the lion's share of that. 5,000 jobs being taken out of Denmark. And Novo basically is the Danish stock market on a concentration basis and on a revenue and a growth basis.
It's that pork and Lego. But Lego's not listed, unfortunately.
Well, I was in Copenhagen at the start of summer, and everywhere you look, you just saw kind of adverts for Novo. So they are absolutely the national champion. And our pre-market, the 24-hour markets on our platform now have got them down 5%. So, and looking at the chat there, well done, Neil. Shout out Maturin for getting that short on. Congratulations.
Hey, well done you, Maturin. Yeah, very prescient, Paul. As I said, it's not just, Novo that is feeling the pain. A lot of the companies that stole the march, that were in first with all these skinny pens and all that, they're now hurting because there's increasing competition, right?
There's always going to be these drugs. There's drugs go generic as everyone found out how much of a gold rush these things were. It's going to. I've got a buddy that's on the UK one. Is it Manjaro? And he has lost 20 kilos the last 3-4 months. I mean, it's quite impressive, these things still.
I'm curious.
But as a business, it's just becoming a valuation play. It's normalizing on what was an exceptionally overvalued part of the market, an popular market.
I'm curious to find out whether your friend has also found that, because apparently the GLP-1 doesn't just make you it makes you lose your appetite, really.
He's described it as turning the volume down.
Yes, but
so he's like, I'm not as motivated these days.
I'm glad you said those words. Because
I'm not.
I'm right. It's the last thing I find joy in. Please do not come near me.
Take it away from me.
Do not take it away from me. But back to this, I'd like to know from your friend, because I like the term you use, tone it down, because early studies are now showing that it's not just the food-related appetite, but it's the smoking, it's the risk-taking, that gets toned down.
He won't be able to comment on that. Unfortunately, he doesn't smoke, but I'll find out.
Does he trade?
He does not trade. No.
Ah, interesting.
He does not. So
I need
potentially
to find someone who's using these skinny pens or these, please tell me, because I'd love to speak to that person, friends, because studies, you can find it online. It's not, it's not something that's not in the public sphere that are emerging there. It also makes you less risk, it makes you less wanting to take risk. So fast cars, God forbid for Ange, smoking, gambling, those sort of things, apparently it kind of dials it down.
Just turns the volume down. It just does. Right, should we look at some UK stocks, stuff that's out this morning?
Yeah.
I'll give you a run through. Of the major caps, I'm going to pick out AB Foods to start with. So our good friends at Winterfloods, thank you very much for your early calls. They're being called down 10% early doors. They're trading, so AB Foods, primarily the owner of Primark, have other businesses as well.
Primada, darling.
Primani.
Primani as well.
Everyone sees them as Primark. Sales growth 1% year on year, however, comparable sales down 2%. They've said that their grocery operating profits are below views. The agricultural operation profit to be significantly below. Operating loss in their sugar division is to be close to 40 million, and some other bits and pieces. They are looking to take an impairment charge of approximately 200 million. So down 10%. AB Foods, watch out below. We've got BAE Systems. Obviously, defence stocks have been everywhere recently.
Yes.
You mentioned that you might have a little look at these drone companies in defence just on the back of kind of overnight news on drone strikes.
Yeah.
But they've been tipped as a buy in the Telegraph, and they quote under their Questa brand, we've tripled our money on this defence stock, but we're still buying. Their upbeat profit outlook leaves it poised to develop further index outperformance, and you can see it right there.
Yeah, so this is daily
It has plateaued recently. What are we saying? Over the summer, it's fairly plateaued, but Telegraph, Questa, they like it as an opportunity to buy.
They do. And also what's also interesting from a technical viewpoint here, friends, I'm going to draw it out for you so that it's easier for you to see. Also for myself and Luke, who wears glasses, as you know, visually impaired.
I only need it during kind of looking at screens.
But we are starting to see a nice bottom there. as you can see, with
nice
my
bottom.
rectangle, a nice bottom there.
Fantastic, lovely bottom.
And it is edging upwards on the daily chart, and it looking like it is about to punch through or breach that 181 point there, which would be interesting in itself, because if it punches through that, then we could see it make its move to the next area of interest, last seen July 2025. Always take a look, always like Beyonce. Was it Beyonce? To the left, to the left.
It was Beyonce, yeah.
Always keep an eye on the left-hand side, because you don't want to miss anything. And also make sure you go up through the time frames.
If in doubt, zoom out, I always
yeah.
say.
Yeah, if in doubt, zoom out. The drones thing, I'm so pleased you pointed that out, because this, if you missed it, was very, very interesting, because it's adding to those geopolitical tensions. Poland shooting down some Russian drones, reportedly shooting down Russian drones. And what this actually means is Polish airspace has been violated.
Yeah, unprecedented airspace violation. Warsaw and Rzeszów, Rzeszów, Rzeszów. I'll have to ask my colleagues in Krakow whether I've pronounced that or butchered it. Their airports have been closed. NATO has been informed. So the Polish PM has briefed the NATO Secretary General, on the actions taken. I mean, look, we haven't looked at the macro yet, but it is just a little bit of geopolitical risk coming back in, and you can see that reflected in the price of oil. We've still got some more UK stocks to go through, but it is just worth looking. The price of oil, it was up 1.2 yesterday, WTI and Brent.
It's now down around 1. It's now up around 1.
It's a further 1% today. So we've got US crude coming in at just below $63 a barrel. So that's going to be one to watch. Elsewhere in the UK, I think it was Andrew McKelvey that mentioned it on the chat, Wix. They're being called down 3%. They've announced their full year numbers, total revenue 847 million. Their dividend is in line, but they say be mindful of the cost headwinds affecting their sector. So they're being called down 3. We've also got, I'm just going to mention the names because there's a couple of stories in the smaller cap space that I want to talk about.
I'll follow you on the charts.
Well, don't rifle through these. Vistry Group being called down 2%. Their first halves are in line, confident on their outlook. We've got Granger being called up 1. Lease, they've got 50% of their leases are up and under the month. But then if we go to somewhere slightly smaller, one that we see a lot of business in, Serica Energy, SQZ. Have a little look at that one. They are being called down 10%, ladies and gentlemen. They've got further delays at their Triton mine, or Triton project, resulting in new guidance for this year of between 29 to 32 barrels per oil. So that is a downgrade on those expectations. They believe that normal operations are going to resume around the end of September. Maintenance on one of their fields is also expected to start in November, which is going to temporarily reduce production by 20,000 barrels per day. So if you're in Serica, delays at the pumps, keep an eye on those.
Miners also might be in focus. Let's have a look at Anglo's there, because Anglo American upgraded to hold at Berenberg.
Well, that'll be Anglo Tech now, won't it?
Yeah.
Off the back of their merger yesterday with Tech Resources in Canada.
That they're going to change the name?
Anglo Tech, yeah, that's what I heard this morning. Yeah.
One of the mega deals. Every time we have John Mayer on, there's like some mega deal.
Well, it's a copper play, right?
Yeah.
We've been speaking all year about how important copper is, and how it's difficult. It's a classic play. You know, it's difficult to bring a copper mine on stream. So what have Anglo done? They've just bought. They've just bought.
Buy it.
Acquisition over building.
Yeah, so no surprises that Antofagasta, Antos, first stock I ever traded in my life.
Really?
Yeah.
Is that right?
All the way back. You never forget.
No,
right?
no. My first one was. Oh God, I have forgotten. A Centamin Egypt, a gold stock. Centamin.
Random.
Very random. I was in my first year at IG and I read an article about them. It was something about they had a court case that I still believe is ongoing. Actually,
I was going to tease you. So it's clearly you checked the fundamentals and you looked at technical analysis. No, I read it. Went for it.
Put £200 of my first paycheck into it and made. I think I made like 50 quid or something.
Nice.
Let's go through.
Glencore as well. Morgan Stanley highlighting this anti-involution policy by China, beneficiary for diversified mining exposure. We've got another minute or so left. I want to really quickly cover oil technicals before we go.
Okay, well, I want to do the market. I just want to do the upgrades, downgrades.
Go.
Anglo-American, you've already mentioned being raised to a hold. We've got the Times tipping James Fisher as a buy with no price target mentioned. We've got Hunting in Questa at the Telegraph being rated as a sell with an article written there. Haleon,
Sensodyne maker.
Correct. They've been raised to a buy at Goldman with a £4.40 price target. And an interesting one, Tritax Big Box. I went to Bicester Village a week or so ago, and I drove off the motorway, whichever it is, and there was a huge warehouse, Tritax Big Box written on it, and I've never seen. I've traded the stock, but I've never seen the physical building. But yeah, so they've been reinstated as an overweight at JP Morgan with a £1.80 price target. And then finally, XPS Pensions rated as a new buy at Berenberg with another £4.40. Excuse me. Tritax Big Box £1.80. XPS Pensions rated as a buy at Berenberg with a £4.40 price target.
Nice. Right, let's get you across some oil technicals here. Oil, as I mentioned earlier, up a percent, and also what's interesting, this is the daily chart, everyone, and we're currently seeing it at $63 a barrel. Many of, and this is speaking historically, you first see a reaction, and we also saw a reaction from yesterday's geopolitical issues related to oil, but now it's starting to perhaps see a bit of exhaustion. Oil may retest around the 62, 68 level, and a bounce at around 61.45 is believed to be completed if we see that. However, if we look at the long upper shadows, as they say, or wicks, some wicks is the preferred way of describing that, then perhaps we can see selling pressure come in if we go back towards the left of the chart. So just be aware if you're trading or investing in oil at the moment, because we heard Dylan here talk about it as well. Every single time you've seen that first reaction to a geopolitical situation, it then comes back off normally.
Drill, baby, drill.
Right. Thank you so much for all the comments this morning. We'll get them, but we have to go to guess the chart first.
Chart of the day. What do we got?
I know. Is it a US or UK? It's a UK one.
UK stock. Okay, cool.
And do we have a brand new song for guess the chart? Right. Let's go.
Won't stop, he's clicking all day. Short then long then fade away. Angel smile, she's playing it cool. Says I watch the moves, let you play the fool.
Oh, right, lots of guesses. Welcome back. Welcome back. We have raspberry pie. We got BP from Yoga. We've got away from numbers also guessing BP.
Yeah.
Fred, close brothers.
Two very similar, very charts. There you go. Hamish gets it again.
Hey, Hamish, you've had a really good run, haven't you?
Oh, hang on a second. What time is it? The market is open, guys.
Yes, that one is. Yeah, ring the bell. Ring the bell.
Oh, we've got a new bell.
New bell. Come on, ring the bell. I'm going to get the chance.
How are we doing? Yeah, look, we're 10 seconds late.
All right, we're going to go straight to the movers. Let's start with the FTSE, looking overall like cautious but higher. Cautiously higher.
Cautiously higher.
Cautiously higher. Haley on top of the list there. Rolls-Royce riding higher as well. Kate Murphy, if you're listening in, tell us if you've made a land. She was dialing in or messaging in, and she was en route traveling yesterday. HSBC also up high. We've seen a rotation this week whilst you've been away into the banks.
Well, they were a little bit.
Yeah.
When I left, they were off their highs, is where I would put them. So if they're getting if they're kind of catching a bit of a bid, yeah, it looks like they're all moving back towards their highs. Well,
take us through some of the other winners there. Any of them pop out to you, Luke?
BAE Systems, of course, covered before the bell, up 0.8%. But yeah, you've got the banks. HSBC's up there, NatWest's up there. That's about it from the banks. My good old friend Scottish Mortgage up 0.5%. Fantastic, finally breaking through.
You and Ronnie, happy today?
Back through 11 quid, which it's been a little while.
Diploma, I'm happy to say as well, that's up 0.2%. Diploma is one of that the obscure stock that is related to defense that most people don't even think about. They think that it's something else because of the name, but actually they make everything in protective gear that will be sold to, fire women and firemen, all the way up to, defense as well.
Interesting. Okay.
Yeah.
Interesting.
So let's have a look to
what about the losers?
Here we are.
Who are the losers?
Oh, Endeavour Mining is down more than 1% there. We also have Antos down 2/3. There was a broker move this morning, wasn't there, with Antos?
Antos, there was not.
I feel like there was something.
No. It was just. I think it was just the move on the copper sector because of yesterday's news with Anglo and Tech. We do have AB Foods, as expected, out looking very weak this morning. They are down 9.6%. £25. In fact, no, excuse me. Are they still in their auction? They will still be in an auction. Give me 2 seconds.
Well, they are still in the auction.
Maybe.
Whilst you're doing that, let's check over to SAP.
Indicating,
also still in auction there. We are still waiting on SAP.
Excuse me, AB Food indicating down 10 now, down at 2018, so they're not yet open.
Right, okay, let's have a look whilst we can too. Germany, let's have a look there. This is the winners list at the moment. Siemens Energy leading the board. Luke.
SAP, there you go.
Oh, there you go. SAP is now
They've opened up 1.6% higher. Then we've got Airbus up at 1.3, you've got Rheinmetall up 0.9. Yeah, what would you say that is? That's a fairly mixed sector.
It is fairly mixed, yeah.
You've got,
You've got consumer names, we've got defense, we've got tech.
You've got infrastructure names.
Yeah.
Yeah, very mixed in Germany. And what's happening at the bottom of the pops there?
Quite a mixed day. Bottom there, Commerzbank down 1%.
Interestingly, the automotive's looking weak.
Yeah.
BMW, Mercedes, and Porsche all looking down at least 0.5% or worse.
Yeah. We're seeing a slight shakeout in the auto sector too, because early in the week they were higher.
Well, the one thing we haven't discussed is tariffs, and we know that the manufacturers are big exporters. India, of course, have piled up with Russia. And the kind of the headlines, at least when I logged in to check on this morning, was all about the. I'm just trying to get the story here.
But this is a story, right? Tell us,
this is it. So Trump is asking the EU to put 100% tariffs on China and India. So if they are putting 100% tariffs on China and India, therefore they're asking the EU to step up, and it's ultimately to try and economically pressure Putin into stopping this war. And so, yeah, there's potentially some kind of blowback from that. Certainly the EU do not want to, well, I don't think anybody wants to put 100% tariffs on anybody because it basically is bugger off in terms of trade. So that's probably feeding through into the exporting part of that DAX index this morning.
But what's also in play as well that we can't forget is that, of course, we've got this, Fed meeting coming up with cuts
we do.
pretty much baked in, and now having decent odds as well for a bigger than expected size one, especially after that jobs report.
Let me show you.
Stood outside the Bank of England when that number came through.
Let me show you two things here. Actually, just on that, I know that we've still got a couple of bits and pieces. Here are two screens that I think are quite interesting. So on the left, we have the data on what cuts are expected next week and how those odds have changed over the last 6 months, well, since the start of January. And you can see that we started the year expecting just about 40 points of cuts in December. These are December cuts, to be clear, as high as 1%, and then now we're settling around kind of that 67 basis points cut. On the right-hand side is Polymarket. So for those that don't know, Polymarket is an independent, it's a website you can access. And what they do is they give event markets, excuse me. So this is giving people the ability to express a view on certain outcomes.
Issa loves Polymarkets.
Who does?
Issa.
Yes, I mean, that's fantastic. To me, this is how do you apply odds to something that is basically a public bookies, right? But it's how this all shakes out. So what they're saying for next week, I don't know why I'll make that full screen just to see if that works better. There we go. The orange line at the top here is the odds of a 25 basis point cut. And you can see over time, of course, the 25 basis point cut has been favoured. However, in recent days, you can see that the chance of a 25 basis point cut decreased from 87% to 80%. And the sky blue line here at the bottom, the 50 basis point cut, has jumped from just a 9% chance up to around nearly a 20% chance now. So those jobs figures from yesterday, those revisions clearly starting to be felt, and to express a view, it's expecting now that there may be more of a chance of a 50 basis point cut than a 25 basis point cut. But it's just interesting to see the kind of a real-time public traded market on the expectations versus what Bloomberg have been saying and kind of how that compares. The trend is roughly the same, but you've got probably a quicker, more real-time indication on the Polymarket side.
Yeah.
Definitely one to add to your, it's interesting. I listened to the All In podcast, as I've mentioned on the show a couple of times. They had a huge conference over the weekend, loads of kind of talking heads talking, but they often reflect on what the Polymarket is thinking. Interesting. Yeah, they often do, because you can say, right, the Fed is saying this, and Goldman Sachs is saying this, but $88 million as on this market that's been wagered is saying this, and that's a decent amount of money for individuals to take a look at. So it's a nice way to check yourself before you wreck yourself. I like to
check yourself before you wreck yourself. Jokes aside, it's actually a really good thing to do, because you're not always going to have a black or white outcome, right? It's not black. It's not always the case.
No. Everything's based on odds and perception and probability.
Absolutely.
I mean, that's where Tasty Trade has built a business on, displaying those probabilities and allowing people to take those views. It's just another way to express those probabilities, to say, right, okay, I think this. Well, why do you think this? Evidence would suggest ABC. And I can price up ABC for you. Yeah. So just challenge each other. That's one thing, and that's one thing that we should do on the show more often.
And we definitely do it a lot on Discord. So those of you who have not yet joined Discord, you need to tap Maturin on the chat, and he will get you in on it. It's a very, very useful space to kind of also welcome people to poke holes at your theory.
Completely.
Just in case you haven't missed something. Luke can tell you. I go over to him and we poke holes at AI LLMs, don't we?
Oh no, I don't. I'm a fully paid up member.
How can I try to do this? How can I break this? Speaking of which,
speaking of breaking. We've obviously missed it for the first couple of minutes, but AB Foods have opened up. They are down 10%. They're now moving lower, down 11.2. So do you want to have a little look at the charts, see what they look like? The market clearly not liking those impairment charges. Let me just get the story.
Here we are.
Back up on my screen here.
Well, what a gap down there. This is let's have a look as well at the minute chart, just to give you a better idea. There we are. So you can see the move there.
Yeah, big break lower. Is there any support for us if we look and zoom out a little bit? What are we saying in
Look
terms
at
of
the
previous times we've been down here?
daily. So looking like we are at levels last seen beginning of May this year. And if we breach that, then perhaps the next level of interest will be levels last seen 4th of April.
Well, actually, interestingly, you see where the top of that wick is, that is right in that level of support, that previous level of support has become a little bit of resistance. So just to kind of, let's just go through those stories again. And if you just click onto news for me.
Yeah, we love inverse polarity.
And then you click on that second one up, Primark's underline, and zoom in for the viewers.
Here we are.
Here we go. So, ABF have said that sales in its Primark business are expected to be down around 2% in the second half, but I think it's the guidance here. Looking ahead, we expect the consumer environment to remain uncertain. It said that its like-for-like sales over the last 6 months are expected to be close to flat, helped by favourable weather and improving from the 6% fall previously. But it said in its food business, which includes grocery brands such as Twinings Tea, Jordan's Cereals and Ovaltine, overall trading was in line with their expectations.
Can I tell you, I never understood the Hovis thing.
Hovis?
Yeah, because AB Foods bought Hovis.
They did, yeah.
But I didn't quite get.
Why?
Yeah, because I just felt like it was a bit
AB Food,
left field.
It's arguably it's a consumer staples brand, right? And Hovis is a popular bread business. I mean, I try not to eat. Do you know the only time I eat that type of bread, non kind of bakery bread, I try and go at the weekend, I'll try and go and pick up fresh bread, right? It's one of my favorite things is to go and get a fresh loaf and get it sliced by the baker and then use that for toast.
You're a sourdough kind of guy?
Yes and no, really. Yes for toast, no for bacon sandwiches. Absolutely not for bacon sandwiches. Bacon sandwiches, it's best to just use the really crappy, cheap, like it'll last for ages if you leave it in the cupboard. That's the best thing for bacon sandwiches. But if you're looking at toast and everything else, no, you've got to go fresh. Got to go fresh. Bread shouldn't last more than a day, in my opinion.
No, because
I just got back from Spain. And everything there is baguette. You get served a couple of slices of baguette every time you sit down, get a beer, a couple of pieces of bread. To me, that is like how bread should be. If you leave that there for 20 minutes, it's going to go rock hard. It shouldn't exist because there's no impurities in it.
Yeah.
Whereas if you leave, a Hovis loaf or whatever, it's soft for a week.
20 days.
Yeah, which is a little odd.
Right, let's have a look at another one that is looking soft.
Well, actually, just good call from Boise there. Hadn't spotted that. Novo bouncing pretty well. Now down just only 1%. Positive to see. Dip being bought.
Dip being bought. A bit of avocado there. One that is looking a bit soft is Vistry. Although it is giving back some of those losses. It was down a lot more.
Click on your full screen there to tidy that up for the viewers, my friend.
Yeah. FN F11. I don't have Phil's voice constantly in my ear saying that. He says he's going to print me a T-shirt that says FN F11.
F11.
Vistry slipping there. And at one point it was at its lowest level since April 11th. Just showing you the price action because as Andrew likes to hear me say, it's coming back a bit now. Can you see the turn there, people? It was the top loser on the FTSE mid caps, and it came because the British home builder, its first half adjusted PBT fell more than 33%. And also in terms of the outlook, it's not about what the company is saying now. It's like dating, isn't it? It's not what you deliver now, it's what you deliver tomorrow. He says here. Market conditions, Vistry says, has softened in the second quarter due to affordability issues.
They did, however, say that they're confident in their outlook, which I think has dampened. Which I think has dampened the impact of that. Drop
whenever a CEO says, but I'm confident outlook, it's kind of like, yeah, you had to say that, right?
You do, but also you want to be accurate. You need to be accurate.
Yeah.
Boise's saying I'm a carbitarian. Yeah, I think I am. Yeah.
Oh, love it.
Although in fairness, both me and my wife, we were in San Sebastian, which is known for its pinchos, right? And pinchos.
Pinchos?
So pinchos is the Basque version of tapas.
Oh.
Okay. So you go to a bar and all they have lined up is tiny little pieces of bread with some stuff on it, right? So we had the most incredible crab, and there's this thing called Teresnos, which is a pork belly on bread. It's just the most incredible thing. And twice we thought, we've got a dinner booking, let's go for a couple of drinks first.
I love it.
And you end up having 3 or 4 little pinchos. You bounce in this bar, then you go somewhere else, then you come in here, then you come somewhere else. By the time we got down to dinner, we were like,
Stuffed.
well, I'm full.
But isn't dinner at 11 o'clock in those places?
Mostly,
Midnight?
yeah. We had 9 o'clock bookings.
Oh, Andrew coming
quite make it.
online saying war paint down 16%. I'm going to look that up for you.
That was on news. We are first half trading was in line with increased revenue with a stronger second half expected. However, their outlook for the full year was downgraded due to weaker consumer environment and US tariffs.
Interesting. Now, another one that is moving quite rapidly is, that has just come through my filter is Gym Group.
Gym Group.
Yeah, it's here we are. Here's a one that hopefully will make you smile. Up almost 10% there. This is because of strong half-year results, and also the company expects 3% like-for-like sales growth for the full year. However, do be aware that in terms of looking left, I'm going to go to my daily view there, because I think we are now, for this stock anyway, looking flat on the year. I think we are pretty much flat.
Okay.
Do you ever use any of Gym Group's
No. Very much a Virgin Active member.
Oh,
There's one near the office.
Posh.
Yeah, only because
Fancy.
they help pay for our work, keep me thin.
I hear one of the best swimming pools is the Virgin Active in Canary Wharf. Is that right?
It is lovely, yeah. It is very nice. Although I don't think it's included. I'm in the one here on
He's
Cannon
not getting
Street.
my hint, is he?
What, go and exercise?
No, get me a free pass.
Go get you a free pass.
You guys got it, right? You guys got it over there?
I'll tell you one thing I've just seen. There was a tiny little tiddler, which I think could be interesting just to talk about from a sentiment perspective. Shortwave Life Sciences. Now, I've never heard of the company, but they're
I've never heard of Shortwave.
They're up 28% on implementation of a digital treasury management strategy. Now, we know we've spoken about that space through the lens of smarter web company. As a kind of theme, that small cap space was super active over the last, a month and a half ago.
What's this ticker?
This is PSY. It's a tiddler on the Aquis exchange. But I saw that SWC raised some Bitcoin this morning. Had a decent day yesterday. They were up about 30% yesterday. So I wonder whether we're seeing a bit of a changing in the sentiment on that treasury, the Bitcoin treasury space. So names like Coincilium, London BTC, V3TC Capital, and of course SWC, potentially just put them back on your radar. If you're getting more companies that are saying they're going to do it and they're popping as a result, perhaps that capital flow is just walking back into that space. Keep an eye on it.
Ah, interesting. I've just looked it up and we'll take a closer look. But before we go to this quick break, just want to show you Wix, because Wix is also turning. Andrew McKelvey, I know that you like anything related to that space, and also some of you have a position on Wix. It was up higher, about 3%. It's now come down a bit, still up 2.1%. Among the top gainers on the FTSE mid 250 index, the move here because the company, or after the company, reported a 4.5% rise in first half like-for-like sales. Wix, great for some things, not great for.
Is it Wix? It's got our name on it. Is that one? Is that Wix?
No, but they're not great for plasterboard.
No, they're not.
No.
Oh, well, there's a.
Yeah, any boarding there, not great. Slightly warped. But speaking of warped, we are going to be back with fast markets and to get you through all the movers that we haven't yet. Don't go away. Eat that bread in front of your screen. Try a cheese roly-poly Maturin, says Gavin Ackers.
Scottish Mortgage looks like it's holding that move.
Yeah, thanks for the heads up, Gavin.
Both of its legs above 11 quid, and my ISA will be much happier. So 11.18 it's trading at the moment. Come on.
Stay right there. We'll be back.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Good morning from the baking show.
Where we get you your carbs and get you loaded up on how to make the dough.
Ah, nice. Nice.
Being done without coffee here, people.
Exactly. Yeah, there was a plead there. It's just like, I need coffee. So we have to take another break in a minute, I think.
Right.
Speaking of food.
Yeah, Apple.
Apple.
We haven't covered that yet. Those of you, did you watch the great unveil yesterday?
The Great Unraveling. No, I didn't. I was flying. Sorry, I didn't watch it. But I can tell you that you are now at least 50% more likely to try and break the new iPhone if you sit on it because of how bloody thin it is. Have you seen what they've released? The
iPhone Air.
The iPhone Air
is what it's being called.
Completely. If you want to have a little look at my screen, you can just get a glimpse of how skinny this thing is. Talk about being on the old GLP-1s. Apple have decided that phones are too big and take up too much space in your pocket, therefore they're going to go with a skinny version.
Yeah. What I found more interesting is the fact that they didn't grandstand at all about how, AI was going to upend their products or how it would even help. In fact, it felt as if they even made a concerted effort
To not talk about
to
it.
not talk about it.
Yeah.
Which is fascinating. And it almost felt like, geeks, those of you that really truly like what we are delivering, we're going to focus on what we do best, and these are gadgets that actually help you in your day-to-day, right?
Yeah, correct. Well, look, pull the chart up. Have you got the charts up on your screen there if you want to have a little look at that?
Yeah.
They are, speaking of things that are thin and flat, the price range on Apple is nothing. Absolutely nothing. So they had a bit of a move yesterday, but overnight, absolutely nothing has changed. And I think it's probably because of that, right? It's they have not mentioned anything about AI yesterday. They mentioned the word a couple times, but it's slow progress. These models do not have the advanced AI-powered Siri, which is what everyone was looking for. They are expecting incremental improvements. And their intelligence features are going to get rolled out with the new iOS. They just cannot catch a break with these AI things. I know that they were talking about partnering with GPT via OpenAI. They've also spoken about partnering with Anthropic and also Gemini. So you're ticking off the big three there, Gemini being, of course, Google's model. But they're ultimately trying to come up with a new way to search. So they're planning this Siri AI overhaul to be landing, I think, in the middle of next year, and the work in progress is called World Knowledge Answers. So yeah, let's I think we have to see, but I think the market it didn't quite get enough information to try and re-rate the price.
No.
If we're playing the fast markets game, looking at that chart, what do you think? Are you a buyer or are you a seller?
I am a long-term buyer, and I think that in the long term, look, Apple's got enough money in its arsenal to get things going really quickly. We've seen that, right?
They've got more cash than God.
Yeah, and Warren Buffett might be saying he's reducing his holdings, but actually he still has a big, right? Berkshire still has a big holding.
Yeah.
And I think in the longer run, ask anyone on the street. I'm sure even if you poked, someone who was looking a bit unloved on the street, they'd know what Apple is, right? They know
Sure.
Everyone knows what Apple is, and so I think that stickiness helps it. In the short term, I think it's tricky.
Would you upgrade? You've got an iPhone, right? You're a fully paid up member of the iPhone.
I am an Apple family.
Do you have the laptops?
Yes.
TV?
Yes.
Oh, well.
I've got the pod.
The earpods. That was one. Oh, you got the watch.
I
I
do.
tell you one thing they did mention yesterday, which is really cool and interesting. I would keep an eye on Duolingo as a US stock at the All Sessions. They announced as part of their new AirPod upgrades, real-time translation.
Yes.
So that is pretty cool.
That is pretty cool.
That is pretty cool.
Yeah. And
I would say I'm a Samsung Ranger, always have been, always will be. But that technology supposedly exists in Samsung and Android already. I can call somebody and it will real-time translate.
Yeah.
But not in day-to-day conversation.
Yeah.
So in theory, you could have your headphones in. The slight kind of I guess the pinching point is, for us to have a conversation in different languages, you also have to have the headphones, right? If I'm speaking English, you're speaking French, we both need to have those headphones, so therefore for them to work.
So we're not like duck talking to chicken. It'll be chicken talking to chicken.
Yeah.
But that's also a really good point that you have raised, which I'm about to get to. This is wonderful. It's like the chips working. We don't like pre-plan a lot of this. I mean,
Completely unscripted.
It's completely unscripted, and we're going with, so you get obviously two sides of the story, because who wants to hear the same thing, right? But also the whole point of that is the stickiness. So it's not just about making gadgets that work for you, that make you want to buy their products, but it's the fact that they're interlinked, and it makes it difficult for you to leave the ecosystem, right? And so, although I don't like speaking to objects, I'm speaking more to the pod, which, by the way, I don't like being a user of that. But the fact as well is that, I'm using my watch increasingly, because we live in a world where we don't travel with a team anymore. Yeah, in the good old days, you'd go to Davos or to Brussels or whatever with 5 people. You'd have Luke, hey, I'm gonna meet you at the airport, what cab, blah, blah, blah. No, none of that. It's you and half a dog, maybe half of you, right, being sent to this place. The number of times I've set it up on Google Maps to wake me up because I've fallen asleep and I'm going to miss that station. The number of times this has told me your Uber is arriving in 5 minutes or your Uber's cancelled, right? That's useful.
Yeah.
What is not useful is, write me prose and poetry surrounding Chris Beecham's birthday, which is today.
Is it really?
It is today.
Oh, well done. Happy birthday, Beachy.
Happy birthday, Beachy Head. We love you, and we love all your quirks, even when you come in and, talk about all sorts of amazing, wonderful concepts. And I go, right, filter it. Give us a lowdown.
Well, I tell you what, he must be, if he goes on a bit of a weave, it must be a weave if you're telling him to get back to topic. Jesus.
We talk a lot about music as well. So.
Well, of course, he's a classical music little boffin, isn't
Did
he?
you know that he did his exam in my hall, in my church hall?
Is that right?
Yeah. So that's why when I spoke to him about it, it was like, I love the hall. And he kind of looked like he had PTSD because I didn't realize he did his exam there.
Ah,
Yeah.
So I'm really lucky. Round near the corner from where I live is what was an old church has been converted into a music hall, and it's this little kind of off a side road, and you would never know if it was there if you didn't know it was there. But it's where the Royal Philharmonic often practice. And so if I'm working from home lunchtime walking my dog, you can often hear them in the background. It's absolutely beautiful. It's lovely.
Let's talk about some of the other stocks that we have missed this morning,
So
or not yet covered.
Serica, of course, we covered them before the market.
Yeah.
They did fall. They are falling. They're down 11.5%. Watch out below there, people. Those barrels of oil per day being pulled out of production. No one likes that. So 12% they're being punished by. Sorry, 11.5% they're being punished by. 157.20 now trading.
Let's take a look at euro dollar as well, and particularly the dollar, because we are starting to count down to this expected Fed cut, perhaps even bigger than expected. Plus, we've got a lot of data out today, don't we?
We've got PPI. Yeah, PPI at 130 is probably the biggest one. That is the producer's price inflation. 130, we're expecting it to be a tick up on a month-on-month basis of 0.3%. Previously, it was 0.9%. So if that is true, and the inflation isn't as hot as it was previously, 1 or 2 data points does not make a trend, of course. I think that'll be received fairly positively if that comes in line.
Yeah. Also taking a look at the options front, because sometimes, they give us a better indication of where things are heading. Just be aware that, they're currently showing market expectations looking...
Well, look at that. I mean, there's nothing to talk about in the world of FX,
It's really
is there?
flat at the moment. But there is a reason for me showing you this, because it does imply that perhaps the FX side of things, the FX market, are slightly ignoring the risk for this impending PPI and CPI data later today. I mean, there could be some turbulence there. Let's be honest.
I mean, there could be in the euro, of course. What we haven't spoken about is the French political situation, which was jamming up my feed when I was on the way home yesterday. It looks like Macron has appointed the defense minister as the prime minister, whose name I don't have written down here. I'll get it for you just 1 second. But it seems to be well received, I suppose. The French CAC is up 0.5%, fairly well received. I suppose that's more of a removing the uncertainty, I would say, rather than a vote of confidence in the pit.
I'm going to attempt at butchering the name. Please let us know if
The
this
pronunciation.
is Sébastien Lecornu.
Say again?
Sébastien Lecornu.
Lecornu.
Yeah.
Perfect. But he was supposedly the defense minister, a key ally of Macron. I mean, look, Beachy's better placed to discuss politics than I am. As an observer, and as someone that doesn't know much about French politics, it was all about the deficit, it was all about the budget. That isn't going to change depending on who's trying to force it through. It's a kicking the can down the road type of scenario. So, yeah, France is in a bit of a pickle at the moment, as are we, of course. In the last couple of days, we've lost Rayner. There's The FT this morning was reporting that there's going to be a business board put together from the Labour government in order to try and mend ties with the city. So there is things going on in politics at the moment.
Yeah.
I just think the kind of inflation story, the growth story, the job story is a more important one for pricing at the moment.
Certainly, and plenty of opportunities still in September. Although it's if I got a pound every time someone said it's the worst month for stocks, we'd all be rich by now.
Yep.
But just another interesting thing to notice, there have been lots and lots of reports recently written about is inflation at 3% the new 2%?
Yeah, well, I mean, September's an interesting one, of course. You lead with the stories that September's going to be one of the worst months on a seasonality basis. And the dips that you don't get, well, when everyone's looking for a dip, that's typically when you don't get one.
Yeah.
Right? And I think that is one of Beachy's phrases. If you're expecting something to happen, it typically doesn't. So
that's it. And Gavin Ackers, SAP breaking above the 235. Thank you so much for giving us a heads up to that. Marcus Keane saying, I've just realized this is a new studio. Nice. Yes, we're not in Luke's penthouse. Or basement.
that'd be rich.
This is the new studio.
Yeah, and actually, even based on the comments that we're getting today, this isn't a cooking show. Here isn't one that I made earlier, unfortunately.
We've got charts. Yes, we can do that. But maybe we should have some bread on the show. I'd like that.
Well, maybe. Well, actually, so back when I started, and it's been less of a thing recently because of everyone's working from home. But if it was your birthday, you had to bring in treats. That was always the way it went. And it did get tea. So it would always be the way it is. Pop by my desk, actually. I did bring a couple of little treats back with me from Spain. So
amazing.
Pop by later.
Hit the like and subscribe button, friends, if you'd like Luke's special bread recipe, and Andrew's as well. I use a Thermomix. I like being...
You got a Thermomix?
I do. I like being
Someone's doing well.
I like being accurate. Like how I deal with my daily life on the charts. Right, and on that note, we are having Charting Crypto, someone who's even more accurate. Thermomix, of course, built in Germany. We have another German machine coming up in the way of Axel Rudolph, so stay tuned.
See you later.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat, come on. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
everyone, welcome to Charting Crypto. Before I start talking about cryptocurrencies, I'd like to just say that I'm not just German, Angeline, I'm also half French. So it's Sébastien Lecornu who is the new French Prime Minister. But anyway, let's look at Bitcoin. And basically what we can see here on this chart is that we've been trying to break through resistance over the last 3 days without really managing to do so on a daily chart closing basis. Now, obviously, we're looking at 24-hour markets when we look at Bitcoin, but still you can see here that basically we tested this sort of resistance area, which I've been showing you for the last couple of weeks now, and didn't manage to break through it. And we did the same again last week and didn't break through it on a closing basis. So that resistance area is made up of the 22nd of May high and the lows going back to the beginning of August, and also the lows going back to the 21st of August and 22nd of August. So the question now is what can happen next? Well, short term, we still look bid. As you can see here, we've been bouncing off the low from Saturday and also the low from Thursday of last week. And it's still looking constructive because we are trying to make higher highs and higher lows on the intraday charts here. But what we really need to see now is a rise above these recent highs here. So basically above the 28th of August high and above the high seen on the 5th of September for us to break through this resistant area and actually head higher again. And these highs come in around $113,421. So that's what you want to look at. That's the line in the sand for me. We could actually now just make this resistance area wider, include these highs here to see whether we can break through that resistance area, because we've got all these highs here acting as a cap at the moment. Now, obviously, we could see the flip side. If we were to slip through this support line, because it's only got 2 touching points, we may come back down again towards this sort of area here, 110,000 or so. And then we've got some minor support on the 4th of September low and also here on the 26th of August low. But basically, as long as we stay above the lows seen at the beginning of September, we are just trading sideways, having seen a bearish move from our record highs in mid-August. But that was part of a bigger picture, which was still bullish. So are we topping out? Quite possibly we are, because basically we made a higher high and then we came down. And interestingly enough, I showed you this before, we made a lower high on the relative strength index. Can you see this high here is lower than this high? So it's not confirming the new record high when you compare it to the previous one here with that reading on the relative strength index. So we had a lower high. That's called negative divergence. And that was forewarning us that we could potentially see a reversal. And that's what happened. And the question now is, are we just going to struggle here and then continue to head down, which is quite possible, because this might now be a top formation because we've fallen through the August low here. For this no longer to be a valid scenario, what we really need to see, technically speaking, is a rise above the last reaction high, which is the high here on the 22nd of August. And that's a long way away. That's around $117,440. So if we were to rise above there, it's pretty likely that that hold corrective phase is over and that we're heading back up again. But until that happens, for me at least, technically speaking, the odds are greater in the short term that we may continue to sideways trade or even head back down again. So I've got a question looking at Ether. Of course, we can look at Ether and let's see what happens here. I think I wrote something on Ether yesterday, so have a look on the IG website and you can see my commentary with regards to support and resistance there. You can also ask your premium client manager, if you're an IG premium client, to add you to the daily crypto technical analysis research I send out every morning before 9 a.m. Where you can see the sort of short-term outlook, medium-term outlook. But you've got a simplified version of that, which goes out on the website anyway with a bullish and a bearish scenario, because cryptocurrencies, we need to be very careful because, as we know, they are unregulated, so you can lose all of your investment. But basically, I'm always giving you a bullish view, a bearish view, technically. So that's what we're doing here. If you look at Ether, what's happening with Ether is really interesting because basically we're just running out of steam. Nobody's interested in it anymore. It's just sideways trading with ever smaller daily candles, as you can see here. So volatility really dropping off. Now, what normally happens once you've got a period like this, it's basically like a coiled spring. So it's getting tighter and tighter and tighter, and suddenly all that pent-up energy is being unleashed, and then you get a big high volatility move. So what can be quite useful to use here is, for example, if you look at Bollinger Bands, let me just have a look at those. You will see that those will have tightened, and you can see here the Bollinger Bands have tightened. So the distance between the upper and the lower Bollinger Band is now tighter than it was before. What you want to see something like this here, where you have really big tightening, and you get these kinks here, so you get a reversal, and that's when you should be ready for a high volatility breakout. You don't know which direction it's going to be, and it could be up or down. So if you want to trade options, for example, you could do a straddle, buy a straddle, a call and a put, or a strangle, do the same but slightly distanced, and you tend to get a high volatility move and make money on one side of that options trade. So you can see here at the beginning of August, we had something similar. We had the sideways trading range, tight Bollinger Bands, and then we broke through the middle Bollinger Band to the upside. That was my buy signal then on the chart. And then we had a nice up move here to new record highs. What we've seen since, as you can see, here's negative divergence. As we saw on Bitcoin, we had a higher high here on the all-time high, but then a lower high on the relative strength index. And basically that led to this corrective move we're in now. But right now, we haven't seen the kinks yet, so we could get even tighter Bollinger Bands. And what we then need to look for also is a breakout out of that sideways trading range. So what could a breakout look like if it were bearish? Basically, what we need to see is a fall through this uptrend line here, which I've drawn in from the June lows through the July lows. And you can see that comes in pretty close to where we are. And what I like to see is not just a trend line break, as you know, if you've been watching the show for a while, but also a fall through the last reaction low. And that low here is on Monday, the 1st of September. So if you fall below that low on Ether at 4,214.82 and close below there and close thereby below this uptrend line, that will indicate that we have broken through this bullish trend and now breaking out of the sideways trade to the downside. And that means we could retest these support areas here that go all the way back years actually to the March 24 high, the high in May of 2024, the high seen in December of 2024. All of these highs basically act as a good support area. And you can see here we bounced off that area at the 19th and 20th of August. So that would be a pretty good support area again because of these previous highs, and we're very likely to hold there. So basically, the picture would only really become bearish if we were to close below that support line here, basically below the high seen on the 28th of July, which is around $3,941, because that would then mean that we have reversed, broken an uptrend line, fallen through the last reaction low here. That would then be a double top, and then we could slide much, much further in this bearish scenario. But as I say, it's more likely that even if we were to slip, we're not going to slip very far because we've got all these other big support levels here going back years, and that is important because yearly highs tend to be more important as support than just highs we saw a week ago or so. So that's the bearish scenario. Probably not that bearish really. The bullish one is basically, as you can see here, we've been trading sideways. If we manage to rise above the upper band here of this sideways trading range, and that highest point I believe is Sunday's high from the 31st of August at $4,498. If you close above there, then it's very likely that we're going to try and retest these previous record highs here on Ether. So basically what I've said here about the negative divergence might already have happened in that case. That was already the correction, and that's all there is to it, if that is then a bullish breakout to the upside. So this is how I see Ether. I've been asked whether I use a VWAP on charting. I do not. I know a lot of people do. I personally don't. Maybe that's because I'm old school. I have no idea, but I don't need it probably. I don't look at it, no. So I can't really help you much with that. I just look, that's the thing with chart analysis. It's not about what you think will happen, what you anticipate will happen. It's about basically unemotionally trying to determine whether you are in a trend or not. So what I always look for is the price action itself. Am I in an uptrend? Do I see a series of higher highs and higher lows? Am I in a downtrend? Do I see a series of lower highs and lower lows? Or am I seeing what I'm seeing at the moment here on Ether, a sideways trading range where it's just sort of going nowhere really. And then based on that, I will decide which trading strategies to use. Is it a breakout strategy? Is it a mean reversal strategy? What indicators are used depending on what my approach is to the markets. But before I look at any oscillators such as the relative strength index here, I always look at the price action and try to understand it, because the price is the difference between demand and supply. What you're looking at right now at the price is the equilibrium between buyers and sellers. And that's the most important information you have to hand. And everything else is a derivative of price. So what you need to look at is the price action itself. Do you have long candles? Is there a lot of momentum behind a move or not? Do you have short candles, little volatility? In which case, as I said, you might get prepared for future breakout in volatility and candles becoming longer again, but you need to wait for the break. You can't just anticipate it. So don't basically trade or invest on what you think might happen, but look at the chart picture, which gives you a good indication of what might happen, and then wait for a signal to be given that will happen. And then if you trade, you could then use stop losses. If you're an investor in cryptocurrencies, you need to try and find a pullback to then get back into the trends, because you can clearly see in all of these we have very strong uptrends still to this day. So that is Ether. I've got a question on Solana here. Let's look at Solana. Breaking to new highs, as you can see here. We talked about it last week. We said it was sort of struggling here, but again, this is what I mean. Yes, it was sideways trading, but then we got a breakout to new highs, and you can see here we are looking very bullish. So if I go onto a longer chart and look at, for example, a monthly chart, you can see that Solana is playing catch up with the other cryptocurrencies. It's currently on track for its third consecutive month of rising prices, and it's heading towards the upper Bollinger Band here. So that is potentially an area where it might little bit struggle, but otherwise it's gunning for the November 2021 highs. You can see here it's very, very bullish, and you can also see, if I zoom into my chart here, that Solana really worked well, bouncing off support. You had these previous support areas down here in early August. I told you about these. We bounced off there. We then went higher. We then went back down to these lows here, which acted as support in August, on the 11th and 12th of August, and then again on the 20th of August, and then we bounced higher. And then we were just ratcheting higher. But even though it was a laborious move higher, it was a series of higher highs and higher lows. So it's an uptrend. So if you invest, you try to basically do so when you get a pullback against the major trend. So you get a cheaper, inverted commas, buying opportunity. And you can see now we've broken through this resistance line here and closed above the last reaction high, the high from the 3rd of September. So I always look at the trend line break plus the rise above the reaction high on the left of that chart, of that trend line break. So once you get that, that's confirmation that the trend line back has actually been valid. Well, since that has happened, we've moved to new multi-year highs. And now we're heading higher, as I said to you, towards the highs seen in 2021. So that view, for me, technically speaking, will remain valid as long as we stay above the last reaction low here, the 6th of September low, which is $199.39 for Solana. You could also say, okay, because that low here for the 1st of September is slightly lower than this one, so you could just put it slightly lower here at $194.23. So if we were to reverse to the downside, like we did, for example, here on the 25th of August, and do so sharply, who knows, it might actually happen with the PPI data today, probably not, or CPI data in the US tomorrow. Well, if we were to reverse, we would have to fall through this 1st of September low at $194.23, because that would also take us through this support line here, and that would mean that we are probably forming a top here. In that case, we could slip toward this previous support area here, taking us back towards the $176 to $173 area. But the trend is your friend at the moment. As you can see here, we're on track for our 4th consecutive day of gains. It's looking still very bullish here. And now our last one to finish up on, XRP. Of course, I can look at XRP, Neil. Let's just do that. And what we can see here, again, I love cryptocurrencies. They chart so well. And you can see here we bounced off support going back to August of the year, of this year, and we did so at the beginning of September. We then broke through this downtrend line, had a small breakthrough, didn't close above the previous record relative high here. And then we did so on the next day, on Sunday, and then confirmed on Monday of this week. Now, what has happened, though, is if you can see this dotted line here, that's the resistance line. It's dotted line. It's only got 2 touching points, but that's now become a trend line. Why? Because we now have 3 touching points with yesterday's high. So yesterday's high was made right at that resistance area. That is acting as resistance. That's why we came off again. So potentially what we're seeing now, let's talk about the potentially bullish scenario. Well, yes, we saw this this formation, this doji perhaps, or hanging man if you want, potentially bearish. But that's only a bearish candle if we fall through yesterday's low. Right now we're holding from there and we're bouncing higher again. So it's still bullish. We are still heading higher. We want to now see a breakthrough that downtrend line and above yesterday's high at $3.03 or 4 cents. Once we break above there, and if we do so, ideally we also want to go above the 24th of August high at $3.12, and then the way is open to retest these highs going back to the beginning of August, and that's around $3.37. So that is the bullish scenario. Bearish scenario, if we were to fall through yesterday's low and close below there, that might be a minor top formation like we saw here on the 24th of August. And in that case, we could drift down again. And even then, we have really good support going back to these August and September lows, all the way down to $2.70. And as long as these hold, we're just trading the sideways trading range here on XRP. Well, that's it for me. Thank you very much for joining me for Charting Crypto, and I hope to see you again next week. Thanks. Goodbye.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own.
Hey, and we are off to the races for all sessions, taking a look at the winners list here first. We've got Oracle, of course, after that news up almost 30% there. Oracle is, of course, 24 hours now, and you can, of course, make a position or take a trade on that at any time of day. GameStop also part of the 24-hour list here at IG, up 6.8%. We also have Hims and Hers, Monkey Man, if you're listening in, up almost 3% there. Broadcom, you heard my mate Julian Wheeler Dealer here talking about Broadcom, and after the interesting comments that it made and how Julian thinks that Broadcom is actually one that in the next year or so is going to make more gains than the Nvidias. If you believe in the move from hardware to software in the coming years, and Broadcom is one to watch. We also have Taiwan Semiconductor moving higher there. Nvidia not having a bad pop as well, up 1.6%. Many of the crypto-related names there, the Riot Blockchains, the Mara Holdings, also bid up today. Let's have a look at the losers list right now, and it's still shaking out. NIO is down almost 4% there. That is, of course, the luxury Chinese EV. We've got Best Buy also down 1% there. Seeing a bit of reversal in the rotation that we saw earlier in the week. Some of the consumer names as well falling back there, and we've got Palo Alto Networks. This is on the extended hours list now, dropping slightly as well. Let's try and rejig it now since we are a bit more into the session. Eli Lilly, interesting stuff there, down 1/3%. I guess, that coming off Novo Nordisk's news and the restructuring, harsh restructuring happening over there. And we've got American Express also on the losers list, down 0.5%, not by much though. So the consumer names, your Best Buys, your American Express, your Procter & Gamble off just a touch there. Let's have a look elsewhere, looking at the main indices first. It is still looking like a cautiously higher day for most indices, both sides of the Atlantic there. Good morning, Bigger Beers, talking about Robin Hood there. Let's see what's happening in that space. Robin Hood is indeed riding higher, up 1.6% there, and this is interesting stuff, given that we are now also taking, keeping an eye on this upcoming Hood Summit. Lots of tools for trading that will be unveiled there. Having a look at its share price, though, it is now starting to show signs of consolidation, which is only normal for a stock that has risen this high, this fast since April, as you can see there. Let's have a look, if we may, to see how far this has moved, and you can easily do that. I'm trying to get you the measuring tool here, which looks a bit like a, there we are, measure tool, and you can just take it to the bottom. Now, let me remind you that this is not, right to the tip and point. It doesn't lock in for you. You'd have to zoom in and be a bit more careful, but just giving you a rough idea of how far it has come since then, 301% there. So Just be aware that what we're seeing right now, that's only normal, seeing a bit of what we call consolidation there on that front. But still, the trend is your friend, as Axel says, and it's still moving in that upward momentum. Monkey Man, good morning to you. Have you done your yoga already? And have you recovered from your late nights out? Let's have a look at NEO, because yes, NEO is one that is very volatile. So if you're a day trader, I know many day traders that look at the stock you know, in any given day, it could be up as much as it can be down. NEO, Monkey Man saying, waiting for it to get to the 5 level. Is that by any chance because of the technicals here, which show that 5 is a key level? Last touch early September, and also last breached in July. Is that because you think that it's going to then perhaps be worthwhile getting into at that point in time? What I would say is look out for what the company says in terms of how much they're investing in their pods, the pods that change the battery without any humans. I mean, that's the aim anyway, without any humans involved. Apparently, I've been told you can go off and do your grocery shop and then come back and your NEO has had its battery changed, but they haven't, at that point in time when they unveiled it to me, had not yet, could not give me a number when I asked as to how much this was going to cost NEO and how much the return on investment was going to be. I think they were still calculating that. CoreWeave trading higher as well after 2 days. Thank you, Gavin, having a look at that. CoreWeave there, part of the 24-hour offering that we have here on IG. And it is up 7.7% at the moment. Let's have a look. CoreWeave launching this ventures group to invest in the future of AI. So there we are. That is what we've got at the moment. Just checking in on commodities as well, because I'm keeping an eye on oil. Oil is coming off. We'll talk a bit more about that with our next guest, whom I'm very excited about, Peter Hambro, who's waiting in the wings. So we're going to go to a short break and we'll be back with Peter Hambro from Peter Hambro Mining.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hey friends, welcome to the show, and I am so pleased to be able to introduce you to the one, the only Peter Hambro, who needs no introduction at all when it comes to the mining industry and also, of course, gold. Peter, welcome to the show.
I'm great honor to be here.
It's been
Thank
some
you very
time.
much for asking me.
Oh my goodness, we would have rolled out the red carpet, except, with the strike and everything, the red carpet rollers are not even here. That's why we got you safely from your home. Right, give us a roundup, because many of our viewers and clients have not met you, have not had the pleasure of meeting you like myself. Give them a quick introduction of your background.
Well, I come from the Hambro banking family. I started my life as a banker, got into gold quite late, but I've been in gold now for about 50 years. I'm almost 80 years. No, I am 80 years old now. And
a spring chicken.
Spring chicken. And I bought my first trade was in platinum. I was 12. And I'd broken my leg, and the bones had been tied up with platinum wire. And so I sold the platinum wire back to Samuel Montague. My father was a director of Samuel Montague, one of the precious metal trading houses. And that was my first trade. My second trade was when gold was freed up and you could buy gold. I bought 10 Kruger rounds from Rothschilds for just about $36 an ounce. and was thrilled when I sold them for $100 an ounce, and that was one of the great trades. I stayed in the banking business one way and another, and money became a commodity, and I went off to trade money as a commodity trader, and then became a proper gold trader with Mercator, the largest gold trading company in the world, large quantity of trading with the governments mostly, and then went in the mining business again by accident and built Petropavlovsk, which was stolen from us by the Russians.
So it's a really opportune time to have you on, because not only is IG in the name itself, IG Group, it comes from Gold Index, but also we're having you on. I mean, we couldn't have planned this any better. Gold, of course, breaching that 3,600 level, managing to stay above as well, and comfortably, might I add. Everyone here is wanting to tap into your knowledge, Peter, which you have tons of. How much higher and what kind of duration are we looking at here?
Well, it's curious. I mean, given the news today of the Polish the incursion into Poland by the Russians and the Qatari operation, it's amazing that the gold price is as low as it is, in my opinion. I've always believed that there is a general move to try and keep the gold price not too fast rising. They've let it rise a bit in the last couple of weeks. It looks as if it was being held at around 333, but now that's broken through, and I think we're looking at silver, which is interesting. I see certainly 4,000 just to catch up with silver.
Yeah, I've got the silver chart up as well, and it's incredible to see silver finally move in tandem with gold. I mean, what do we talk about duration here a lot, Peter?
Silver's been outperforming gold. It's been on a sort of 10-to-1 ratio for quite a long time now, and silver has been dragging gold up. It's moved actually faster than gold, and it's now considerably higher. But I think that the chances are that gold will go substantially higher. I've been a gold bug and much derided for that for a long time. But it has stood me in very good stead, and I think there are still some stunning opportunities in the small gold exploration companies who have been totally left behind by this move, and the chance for those to move fast and higher, I would say is very good.
We'll touch on those in a moment, but let's go back to gold. So many different outfits out there, as you know, coming up with different forecasts. Goldman's the other day saying that if Fed loses all credibility, it could be 5,000. Others saying 4,000. Many of the big houses out there. I mean, what's your call for, say, this time next year?
5,000 at least.
Interesting. And so you're on the side of those bulls saying that this is just the beginning. This is just tip of the iceberg of a big, new renaissance for gold, and we're just getting started.
Well, I think that the elephant in the room really is whether Trump goes for the idea of monetizing the U.S. assets. And the easiest way to monetize U.S. assets is to revalue the gold price. And there's no point in revaluing the gold price from 4,000 to 5,000. It'll be from 4,000 to 24,000. That is my view. That's where the risk on the upside really is.
Lots of people chiming in on the chat there. Monkey Man saying, Peter, welcome. What is your first gold rule that you always follow when investing?
My first rule is to be absolutely certain that the gold I'm buying is real.
There you have it. Andrew McKilvey also saying, Peter, you're a legend, welcome. Friar Tuck, one of our moderators on Discord and also a core viewer of Trade Live with IG, he's asking, does the regular buying by China and other central banks provide base support for gold's market price, i.e. are they buying on the dip?
Well, China is very interesting because, and they were customers of mine when I was a trader, because we were big traders with governments. China is surprisingly not only the biggest buyer of gold, but also the biggest producer of gold. And that tells you a lot. And it's been very interesting over the last, say, 25 years that China has been encouraging people to buy gold. They were the first people to install automatic machines where you could buy physical gold out of a cash machine. But they wanted to strengthen, or my view is that they wanted to strengthen the economic power of the middle classes. Mm-hmm. And so if there was a disaster, there would be a strong economically sound middle class that could keep the country safe.
What's also interesting, and I know of that story because the first thing that came to mind was how are they going to secure those effectively, gold tellers. What's also interesting is, whenever anyone who is of Chinese ethnicity, whether they are, from China or not, I confusingly was born in Surrey, but that's another story. You do always, if you travel, and it's still until today, I mean, it boggles the mind because we've got, the crypto and we've got, digital cash and Revolut and all the fancy apps and everything. You still get told that you should always have meikam, which is dollars, and you should have kam, which is gold, with you at all times. So that is still something that is passed on over the generations. What ratio? Sorry, go on.
I've lived by that all my life, and I inherited from my father a little money clip with 2 gold coins, American gold coins, on either side of it. You could easily break off because that was enough value to buy an airline ticket out of wherever you were, and it's a really important thing to do. But there's so much risk involved in. I mean, why would you want to own a Bitcoin? Because if we run out of electricity, what's happened to the Bitcoins? Whereas gold's gold.
But there's also a joke that isn't there a saying that gold, you dig it out of the ground to put it into another hole in the US somewhere. I feel like there is a saying somewhere.
Absolutely. I mean, and when I was asked what my first rule about buying gold was to be sure that it was real, that's one of the risks, that there are still fake bars about, and you have to know very much who you're buying it from and so on. So that's the most important part. But a coin with a US stamp on it or a British stamp on it is definitely the safest thing to have. And the great joy about having a coin is you can't buy a fish breakfast with a large bar. I think you would never get change back. You see what I mean?
Yes. I completely get that because my grandparents were goldsmiths, so I understand the weight. So even a gold bar that is like the size of this pen in front of me. Whilst we're on that, a key point that many of our viewers would like to hear from you about is the ratio. So someone listening and saying, oh, I've got a bit of money in physical gold. They've got a bit of money in some miners, got a bit of money in ETFs. What do you think is the right ratio? What is the right mix for someone wanting exposure to gold right now?
Well, holding gold is really monetary insurance, because it is what it is, and it can't go wrong. If you have a big portfolio of tech stocks, and it's fantastic, well done, and the gold price movement to the gold price is not going to make any difference to you. But if they all crash down again, you've still got the gold, which is the important part. I've always said that somewhere between 5 and 10%, depending on the level of anxiety. And right now, at 80 years of age, this is the most anxious time I've ever known. And so I would have thought that 10%, but buy it physically. Don't buy promises. Gold is it's so easy to buy gold, paper gold. It's also incredibly easy to manufacture paper gold, because you can go and give money to a bullion merchant, and he will give you a receipt for gold. May not actually have it, but if you've actually got the bar, actually got the coins, then you know that they're yours, and you have to be careful where you put them. But that's what I would do.
Fantastic. And by that you mean physical gold and like the royal mints and the bullion by post, those sort of outfits. Is that what you mean? Just to clarify?
Very much. Yeah, very much so.
Brilliant. We've got some other questions coming through the line now as well. A Pelican, whose real name is Mo, who comes to our trading events, asking, can you look at copper? Is it possible to talk about copper and Trump's actions and whether or not that can move it? Andrew McKilvey, really active investor there, saying, Peter, small explorer Orosur, have you any views on Orosur? I hope I'm saying that right. Up yesterday on drill results and down today.
I don't really follow the market, the listed market for small gold shares. I have my own investments, and I'm involved still in mining and exploration. So that's where my principal interests are. And so commenting on companies that I know nothing about, I'm afraid, you can't do.
How about copper? Do you have a view on copper?
Well, I do. Largely born of my friendship with Robert Friedland, who told me that copper was the best thing in the world, and it has done him extremely well. It doesn't seem to move as fast as I thought it would, but it is so critically important in all the electric world that and the shortage is looks obvious. I'm not an expert, but following Robert's copper businesses, I think would be a sensible way to invest.
Certainly, with copper as well, there's a lot of talk about, Chinese data putting pressure, so weaker Chinese data putting pressure on the price of copper there. Do you agree with this, or do you think there's something else at play?
I don't know enough about copper to be able to comment.
Right. So speaking of which, some of the questions that we normally get here surrounding gold is where do you get the data? So where is a trusted source for you, Peter, that will give you insight on, which way gold is heading? We've got loads of people here that use, for example, World Gold Council, IMF, but, they want to hear from you what you use personally.
I use a huge number of internet feeds. Surprisingly, the the people who are always considered to be complete maniacs are the ones ones that keep saying that there's a conspiracy theory about it being manipulated by the Fed and so on. So I follow quite a lot of that because it looks as if that may be real, and so that's part of my thing. But there are so many. There's not one in particular. I'm looking for things that don't quite jibe. Looking at the gold price today, the gold price should have spiked, and it hasn't. On today's news, which means I think there's a good chance it will go much higher quickly.
And volume's not popped as well, which is interesting in it. Yeah, as well.
You'll see the volume that is driving this market is the over-the-counter stuff that not the futures market.
Do you think we're also in a situation that, perhaps the market's waiting for some sort of reaction or retaliation first before reacting? Because I agree it is rather low, just 0.5% higher after that Russian drone situation.
Well, we're going to have to see what happens. I mean, the NATO response, Article 5, is pretty important. I mean, this is serious, and NATO hasn't responded publicly. I haven't seen it anyway since I've been on here, but it's something that hasn't happened before. We haven't seen an incursion.
Whilst you're talking, I'm just checking the wires to make sure that we haven't missed a response from NATO. And it also comes at a very interesting time because, of course, we've got the Defence Summit, the DSEI, taking place at the moment, not too far away from us in Excel. So looking at NATO, there's not been any response so far. The news still on the fact that Poland is scrambling NATO defenses. This is according to Sky News. Times is carrying a story that I think you saw this about a day ago. Dmitry Medvedev claiming that Finland is planning an attack on Russia. This is followed. This is in the Times. So it's really interesting that we are not hearing anything yet. However, historically, Peter, if there's going to be an announcement or a speech, it normally comes near lunchtime, historically.
As the US opens, so
yes,
probably true.
Yeah. Shrimp Fred and Arsax, Marcus Kane, Bigger Beers. My goodness, which question do I go with first? Bigger Beers asking, has there ever been a time when record levels of gold reserves did not signal an impending war, despite politically contentious climates? Your thoughts, Peter?
I'd have to go and look at the records because I haven't seen that. I mean, the one thing is certain that buying of gold by China and by central banks generally leads me to believe that they are as worried about instability as anybody. And it was really interesting with the central banks. I mean, I was the Soviet Union's biggest gold trading counterparty for a while. Mm-hmm. And they used gold just like money. And the guy who did it is now lives in America and still remains my friend. But if you're looking at reserves for a country, where would you put them right now? There's so much instability everywhere. Japanese political problems,
France,
Nepal, France,
the US.
Absolutely. I mean, would you want to put all your nation's wealth in the US dollar right now, given what the present position is? Not me. And gold is the only answer. So it must go higher.
On that note, I'm just going to quickly read this out because we've just had this come through right this second. You're hearing this first. NATO says it is in close contact with Poland and other allies after the drone incursion. A NATO spokesperson also adding it's the first time its planes had engaged potential threats in allied airspace. So underlining what you just said, this is a paradigm shift. Yes, you did say it first here on Trade Live. This is serious stuff. What is even more interesting, Peter, is the fact that we are hearing more from the Polish side than NATO itself, because on the Polish side, tons of statements already in the last 30 minutes. Polish PM saying first signals from NATO members show understanding situation is serious, but didn't say how or what the signals were. And Tusk also saying we're in the situation closest to armed conflict since World War II.
Yeah, that's exactly what I think.
On that cheery note, we go forth with our questions until we get more on the line here. You're watching this live on Trade Live with IG. We've got Marcus Kane saying gold is a poor substitute for Bitcoin, some say. What is your view? I think I already know your view, Peter.
I think Bitcoin is very clever. I don't really understand it, but I just don't understand what happens in the world that we know. If there was a serious breakdown in electricity generation, how'd you get your Bitcoin?
R. Saxena, who's big in the defense space and also all things commodities, Clever Clogs, they're asking this question. What is your favorite place to buy gold in the UK, Peter?
Well, Sharps Pixley across the road is a place that I spend a lot of time looking at.
Shrimp Fred also asking, has the market, Peter, become desensitized regarding gold? I assume he's talking about desensitized to geopolitical risk. Is that what you mean, Shrimp Fred? Peter, what do you think? Do you think gold's desensitized, or is something else going on? Or are we seeing a lag are they waiting on a response from NATO in the price action?
I think there's all of that. And I suspect that the smoothing team will be out there smoothing a bit. I mean, this could be a mega spike, and I think the world is trying to hold itself together just at the moment. But watch out.
Steve Davies coming in on the chat asking a very good question. Hey Peter, is there anything that could take the gold price down 10 or 20%?
Well, we saw it happen when there was a crisis with the big position, and when Gordon Brown sold the gold for completely ridiculous reasons, in my opinion. So if you had suddenly had somebody was persuaded to do this for some reason, yes, it could happen, but it would be a brave position to do that.
Mm-hmm. Those of you just chiming in right now, just an overview of what we are discussing. We just read headlines from NATO, still waiting on anything concrete from them, nothing yet through. Poland, of course, conducted that military operation after Russian drones violated airspace. Marcus Kane asking there, I'm thinking crypto is being used to keep a lid on gold prices. Could this be something that's happening? Is the movement into crypto tempering
Could
gold
be.
prices?
Yeah.
So that could be one thing. Speaking of which, we've also got risk on the US side. Trump, never a dull moment with Trump, asking EU to impose 100% tariffs on China and India to put pressure on Putin on the Ukraine war. I mean, what do you make so far? I think our viewers want to know, what do you make so far of Trump 2.0? And how does this affect gold? I mean, it has done spectacularly well. Gold's done spectacularly well since Trump 2.0. But is it likely to be the same trend until the end of his tenure?
Well, he didn't put sanctions on gold. I'm sorry, tariffs on gold, which says something about the nature of gold compared to everything else. I think the whole tariff thing is completely mad, and I don't think people have realized the damage that it is already doing. If you look at the latest figures, the mistake in the employment figures from America, it was again very interesting, and I think that talking about a reduction in interest rates when tariffs are creating inflation is some of the weirdest. But what I read, the strangest thing is that one part of my life when I was trading money rather than gold, we lived hour by hour on the measurement of money supply, M1, M2, and M3. And that has completely disappeared from everybody's view. The M3 numbers came out once a month, and interest rates changed up and down like crazy. That we seem to have forgotten that for some reason, and I wonder whether perhaps people might start looking at that again.
It'd be nice if things got into sync again, but from the last few years, if anything, I'm becoming increasingly convinced that markets are completely out of whack. I don't know what your view is on that. That's my own humble opinion.
I think that people tend to forget that the value of something is measured against the value of something else, and the market is strong because the currency is weak. When you think that I started work in 1964 and my annual salary was £250 a year, and we've managed to survive that inflation, and it's without a serious war, but now it seems to be getting out of hand.
And the number of questions coming through, because they're so excited to you being here and being able to answer this, live on air with us. Numbers are also of questions also getting out of hand. As per usual, no pressure, but if any of these you can answer, our viewers would be very, very appreciative. Monkey Man saying the Great Depression was approximately 100 years ago. Peter, do you believe in cycles?
Not really, no.
Okay, good one, because I was bracing for you to go, yes. How do I dig out all my gold. How do I get gold into my ISA? That is Scarpa 777. What do you think is the best way?
Again, that's a technical question for investment, and I'm not qualified to be able to answer something like that.
Shrimp Fred asking, what does Peter think is the weakest link in the global economy at the moment? I guess this is kind of linked to, what could possibly drive gold prices, whichever way, and also the fact that, what could possibly make it, I hate to say this, but, us wake up in the morning and just have blood drain, right? What is the weakest link in the global economy at the moment?
The level of debt. Corporate debt is one thing, but government debt is just I mean, look at France. Look at Europe is full of it, and our chancellor here seems to be in a terrible mess. For that reason, the debt issue is where the way the weakest link.
When are we going to see that tested? Because each time we think the bond markets, Peter, are sending us red flags, the stock markets just continue to ignore it.
Well, you'd expect that because the stock market is really a measurement of cash flow. You invest because you put the money in and you're going to get dividends, and the price will go up. But actually, a large part of that is the value of the pounds or the dollars that you've used to buy them doesn't buy as many bottles of gin as it used to.
Clearly, lots of people listening in. Neil Bruce is saying could listen to Peter all day. Will he write a book? I'm going to let you think about that one. Baker B is saying, how dangerous is US government debt to the rest of the world? Good question there.
Well, again, I'm not an economist, but the level of interest that it's having to pay, is horrendous, and it's just borrowing more money to pay the interest. And that's when things really get out of hand.
Speaking of interest, the market's obviously now very interested in that Fed meeting, a cut pretty much baked in. The question now is, will it be 25 or 50 basis point cut? And how much do you think, Peter, is this already baked in to the current gold price?
I don't think at the moment the gold price is much affected by interest rates. There are periods when it is. Right now, I think it's more a question of anxiety rather than interest rates.
You talked about potentially 5,000 an ounce this time next year. I mean, what conditions would be necessary to support that, and what could possibly derail that view?
If somebody cured inflation, that would probably derail it.
Some people, I mean, like some reports out there are saying 3%, 4%, that might be the new normal for inflation.
Well, it's ridiculous to have target inflation. It's just an unseen tax on people. You don't notice. You don't notice that so. I said that there's no real demand for people for governments to conquer inflation, because it makes life the debt what they're paying back is in inflated dollars or pounds or whatever.
Someone listening in and watching this morning might be asking, given those circumstances, what's the right ratio? I know we talked about, you like physical gold, you talked about Sharps-Pixley, but if one wanted to diversify how they invested into gold, I know you talked about 10-20% of your portfolio, but do you have
5 to 10, I said.
5 to 10, sorry. 5 to 10. Do you have a percentage in terms of, whether they should look at ETFs, for example, or other instruments?
Yes, my view has always been that an ETF is just another promise. Your banknote says that I promise to pay bearer on demand. On British ones, the American ones say that they're legal tender, and the euro notes have nothing, which I always thought was interesting. But they're promises, and an ETF is a promise, and a bar of gold, a beautiful little 10-tailed bar, like a big toffee, It's nice and warm when you touch it. Nothing beats it.
Away from the numbers, I'm just going to read this out. As per usual, no pressure, Peter, just reading them out. But if you feel you have a view on some of them, just let us know. Away from numbers, good morning to you, Neil, saying, I lost my gold investment, Petropavlovsk, with the Russian invasion of Ukraine. Marcus Kane saying inflation is only a tax on the poor. They spend all their income, VAT, and less, excluding power to improve their income. So those are just some of the people commenting. I just want to end with a question to you, Peter.
Let me just break in one thing. Somebody was asking about Petropavlovsk. I don't think that the world understands that Pavel Maslovsky, who was my 50-50 partner in the whole of that enterprise, has been in jail now for 5 years on entirely trumped up charges. Has very, very little chance of getting out, because every time his sentence comes to the end, they dream up another thing and hold him uncharged. And it's a really terrible, terrible thing. And it's all part of what's happened to Russia itself, which was a country I was very, very fond of until things went wrong.
Andrew McKilvey asking, Peter, do you think the CPI underestimates the inflation we suffer? Of course, we've got the PPI and CPI numbers later.
I watch inflation as much by how much it costs me to have lunch in the restaurant next door to my office, and that seems to be a very good marker, and probably better than the CPI.
Right, we are going to have to leave it there because we are coming up to time now. It's been such a pleasure having you on, Peter. I hope we can have you in the office with me face to face sometime soon when TFL does not spoil our plans. But it'd be lovely to see you again. Loads of our viewers saying thank you so much and saying it's been such a pleasure, and thank you for taking time out of your precious day to answer their questions. And for those of you that have more questions for Peter, do email ask@ig.com because it will come straight to me and I'll put it in front of Peter. And Peter will catch you offline. What's the rest of your day looking like, Peter?
It's pretty busy.
Right, we will speak to you a bit later. But thank you for joining the show. Yeah, we will catch you a bit later. See you on Discord.
Take care. Bye now.
We're teaching Dylan Italian here on Overtime. It's Tuesday, September 9th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. Here to take you through the rest of this hour as the futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade on the website, tastylive.com. Welcome. Tell us what you think in the chat on YouTube. We had the Apple event today, gentlemen. Dylan, we don't need to teach you Italian. Next generation AirPods will have live active translation in them. Oh, that sounds cool. So much for needing to be autodidacts in the future. We'll just have, those universal translators like in Star Trek. Cool. Either way, though, that's not the big news of the day, Dylan. The big news, of course, Ilya, the job revisions, birth-death model adjustments, an economy that's being overstated, 50 basis points of cuts coming next week. What a world of possibilities we entertain here. But whether or not those cuts come doesn't seem to be bothering the markets, or bonds, or gold, which if those cuts are coming, gold and silver certainly didn't get the message today. We have oil on the move thanks to Israel going after Hamas and Doha. Okay, that's a new wrinkle. Oil prices do come back in as the U.S. denies any involvement. And then the dollar here, quite frankly, firming up a little bit. Euro, pound, even the yen giving up its gains after rumors overnight that the Bank of Japan would hike rates at their next meeting. Volatility stays pinned lower. IVRs are dipping. I think first things first, Ilya. Yesterday on the show, we were talking with Mike Butler. We put on I put on the SPX Iron Condor trade, put it on, took it off, made a quick $90. Thanks, Mike Butler, for refilling my gas tank. So the market doesn't clear out the Friday high. It doesn't clear out the Friday low. We seem to be pinned here.
Yeah.
And tomorrow, perhaps, will PPI unpin us?
Maybe. I think very clearly the markets are waiting for that event risk. You see it today. Bonds don't go anywhere. Stocks don't go anywhere. Gold tries to go somewhere and ultimately ends up basically unched on the day. What's interesting, as you were saying, is that the dollar shrugged off what looked like might have tested its ranges, might have tested its bounds. The Swiss franc was the only one that had a meaningful move outside of norm ultimately in the wake of the soft jobs report on Friday. And you end up with a dollar that essentially resets, especially in the euro. The pound to some extent, but especially in the euro and also to a significant extent in the yen from that jobs report, much as stocks have now reset if you look at the S&P from that jobs report. So you have this thing now, it's a bit of a weird month in the sense that the PPI report is coming out first. Usually the CPI report, or at least in recent months it's been the case that the CPI report has come out first. It used to be some years back that the CPI report would always come in second. No more. Now it's kind of a mixed bag. This time the PPI is first, and so obviously that makes it more important because it makes for a more convincing lead-in for CPI, because that's the one that people really want to know. And if you get that one first, PPI kind of falls by the wayside oftentimes. Not this time and not recently, because the PPI data has been where we've seen the tariff inflation start to pass from wholesalers to consumers. Wholesalers were essentially defending consumers up through last month, up through July, that is, the last month of data. And in July, they pointedly stopped doing it. There was a 0.9% jump just in 1 month of PPI. Most of it was margin expansion for wholesalers, and that's them basically saying, you know what, we're going to take our cut back. We're not going to insulate consumers. You pay. And that's obviously the beginnings of the kind of thing the Fed is worried about, stagflation risk. So if this data is hot again, never mind this rate cut. That's going to happen. It is what it is. The markets know about it. It's priced in. The bigger question is what happens after. And the markets are expecting a very dovish Fed next year. Whereas if this data is hot, they're not going to get it. And your audio.
Sorry about that. Rate cuts, no rate cuts. You were talking in overtime about how the only thing that matters is inference. You seem to be locked in on the AI trade still, despite whatever else is going on in the market. What keeps you so focused on this, your eye on the prize? Is it the fact that we have a NASDAQ that's beginning to break out here again? What makes you so
professional life to the power of inference and the dastardly, demonic, and horrifying capabilities that are implied by the ever-present listening and watching. The cameras and audio are in a permanent consumption of data of all of us at all times. The AI robots are now mastering the art of inference. So think of like the Netflix algorithm that recommends movies that it thinks you will like and how it actually does a pretty good job, or TikTok doing a good job of jacking you full of ever never-ending set of reels that are to your pleasure and liking. I believe this is that on times a million. And so I think that, we're basically in the process of surrendering any sense of sovereignty of human thought or behavior to the total domination of the fact that we are actually as predictable as rodents on a wheel or ants on a hill. And that the matching of NVIDIA GPUs with Google compute knowledge and Apple listening and camera devices offers a stunning value proposition for, like, if people thought that you could make a lot of money back in the day, meaning back in the day was probably like a week or two ago or maybe a month ago, but you could make money back in the day using targeting or tagging. Inference makes targeting and tagging look like a general broadcast ad buy in 1977. And so I think that the entire AI super stack, from the hardware through these data companies, from NVIDIA through Meta and Google, represents a value proposition relative to the sale of goods and services that is incomprehensible. Because the issue is there's always a never-ending list of goods and services. Mm-hmm. And then there is a never-ending list of human beings who may have an interest or an appetite to purchase those goods and services. And the only barrier between sales growth in those goods and services is the ability to efficiently match those goods and those services with those individuals at the time that they're looking for that thing or that service. And as the robots and inference takes on total dominance, it will know when you are going to think to yourself, my goodness, I've been wearing 2 shirts for weeks. I need more laundry detergent. And it will immediately know the moment when that thought crosses the mind of who the person is in your household who buys the laundry detergent at a level of efficiency, the likes of which the world has never known. And I think people will delight in it because they'll be like, the robots know what I want before I want it.
Yeah, I mean, Amazon's been doing that for a while, haven't they? I mean, I feel like
Everybody's been doing it. Everybody's been doing it. I just think that it's not about doing it. It's about the efficiency that the new technology allows. It's just the next layer of effectiveness of something that we've all been living with for a decade.
No, I noticed the efficiency in something like my Alexa, where it will send me a message every now and again, like, hey, you might be running low on paper towels. Would you like me to reorder you some? And it's like, what are you talking about? And then I go downstairs. It's like, oh, there's only 2 left in the closet. And because I've ordered enough on a certain frequency and a cadence, like, it kind of knows just to ask, which creeps me out.
The way inference works, and that's a great example, just linear, but the inference knows that human beings who allow their cell phone batteries to go to 0 and lose their charge have 100 other behavioral characteristics that have nothing to do with charging your phone. Like, they know that somebody who allows their phone battery to go to 0 also is somebody who's more likely to be delinquent on a credit card payment, also is somebody who's more likely to, I don't even think they have lists. It's the craziest thing I've ever seen. But it's not the linear correlations you would imagine, like, oh, they're counting the number of days since I bought toilet paper. Or they're counting.
Let me plug in my phone then. You're making me self-conscious. I don't want my credit score to drop.
I'm telling you, inference will tell you as a matter of fact that if you are an individual who will allow your phone battery to lose its charge, that indicates 100 different behavioral characteristics that are entirely predictable. And it's doing that at every angle of every touch point of everything. And it's not just like, oh, it knows when I swipe my credit card, or it knows, when my Easy Pass goes through the Tappan Zee Bridge or whatever. The camera and the microphone on your phone are listening to you all the time. Every single thing that you say, every single thing that someone says near you, every location that you occupy, the time that you awake, the apps that you look at, it is horrifying and brilliant and will be the greatest source of money for in advertising base. It's just ad dollars, right? It's the same way it was advertising for William Randolph Hearst when he was a newspaper king, or for NBC in the heyday of the 1980s when they controlled broadcast, or ABC or whatever, or Meta obviously has been on it for, more than a decade. I just think, or Google, but this next level is going to be at a level the likes of which the world can't even comprehend.
Ilya, that Dylan saying that, it really contextualizes a text message he sent me the other day about the phones and the microphones and watching. He asked me, like, hey, can you delete my search history if something happens to me? And I didn't know what it was about, but now I understand his stress.
I mean,
doesn't matter. Even if he deletes his search history, it's already in the memory of the robots. The robots know. Doesn't matter.
Yeah, I mean, I suppose if you have to live as though you are in the Soviet Union and the KGB is in the walls at all times, it would sort of the realization of that might get you to behave this way or that differently. Ultimately, for a simpleton market participant such as myself, all of this is kind of difficult to put a dollar value on vis-a-vis sort of imagining what it means for price at the margin. I completely see and agree with a lot of what Dylan is saying. I mean, there's no question. I mean, that the phones are listening, that there's an incredible opportunity at the lowest hanging possible fruit with inference, just like there always is with any new technology. The first thing to happen is the easiest commercially viable application. And obviously there is a huge opportunity there in advertising. I mean, just scroll Instagram for 10 minutes. You'll immediately see that the thing is adapting to whatever it was that you were looking at recently, whatever you might have said recently, whatever you might have texted recently, in terms of
sent you a DM.
Yeah, in terms of the things that you've recently interacted with, you immediately see ads for adjacent things. This is not like pie in the sky stuff. But also, just like every technology now and for all time, it will alter human behavior. Human behavior will normalize. The opportunity will close in terms of its outsized potential. Like, all of these things happen and will take X number of decades to play out, whatever. The larger question for me from a trading perspective is, none of this stuff is not in the market as it exists, and all of the really fancy stuff is unknowable in a publicly traded assets kind of sense until it starts to happen. And so the question for me is, which part of this is not, where is the incremental dollar in this story? Let's say over the next 45 days.
Google.
Okay, well, Oracle is out here today with their earnings plus 21% here, which would be the best day that it's had in this millennium, which I think is a fun way of describing it. Yeah, I think so. Best since 2000. They're saying, the CEO, Safra Katz, says, we expect Oracle Cloud Infrastructure revenue to grow 77% to $18 billion this fiscal year, increase to $32 billion, $73 billion, $114 billion, and $144 billion over the subsequent 4 years. That's a pretty dang strong guidance here. So total revenues are up 12% in dollar terms, 11% in constant currency terms. Their cloud revenues are up 28%. In dollar terms, cloud infrastructure revenues up 55% in dollar terms. Yeah, I mean, this looks really strong. This would be the best performance that they've had this century, this millennia. Not too shabby.
No. But Dylan. again, this is that picks and shovels phase that we've been talking about, right? Like, we know this is happening. Take a look at. How can you
and Sosnoff talk about getting short in the face of the supernova?
Because it's priced. This thing that they're reporting is known news. We're just putting numbers on it, and that's why the stock is adjusting. But take a look at what. Chris has it up here. What are NASDAQ futures doing on this? I mean, if you go to a 5-minute chart, is the index noticing? is this a,
kind of?
I mean, it kinda is right.
It's up 40 points, 30 points here after hours. I mean, this is the thing that Larry Ellison said here today. Multi-cloud database revenue from Amazon, Google, and Microsoft grew at the incredible rate of 1,529% in the first quarter. We expect multi-cloud revenue to substantially grow every quarter for several years as we deliver another 37 data centers to our 3 hyperscaler partners for a total of 71. And next month at Oracle AI World, we will introduce a new cloud infrastructure service called the Oracle AI Database that enables our customers to use the large language model of their choice, including Google's Gemini, OpenAI's ChatGPT, xAI's Grok, etc., directly on top of the Oracle database to easily access and analyze all of their existing database data. So if you've been a company effectively trying to build a bespoke AI system for your company internally, and you're an Oracle customer, you can now just have this exist for you as is. Obviously, the market's treating it nice, but this goes back and forth with the question we've talked about AI adoption.
Is it treating it nice? Because I mean, again, look at NASDAQ futures here. They're at the top of their range going back to Friday. They're not even approaching their top from August, mid-August, where they set their high. Now, if they run, okay, I mean, Oracle, yes, it's responding. We also saw Meta jump, 12, 13%?
Yeah,
on its
13%.
earnings. And what did that do for the Mag 7? What did it do for NASDAQ? Not a thing. So again, my question isn't about the validity of the progress or what it means for the individual companies. I mean, that the price action answers those questions. The markets would tell you if this is nonsense and if this isn't real. They're rallying. They're telling you it is.
Well, I think
what does this mean for the markets and not these individual names? And what the markets are telling us is it means nothing.
Well, can I point out here that reading off these numbers, I haven't mentioned the earnings or revenues relative to expectations. Oracle's EPS was only 147 against an expectation of 148. Revenues were 14.92 billion versus a projection of 15.9. So arguably both missed, and the stock is still up 20% plus after hours.
Well, this is the whole thing.
Because people care about what's coming down the pipeline. They don't care about what's in the rearview mirror if it means sunnier days are ahead.
But again,
and
they only care for
grow.
the name, for the individual company. It's not going to broader sentiment and hasn't gone to broader sentiment in a month.
Well, that may be changing here, Dylan. I'm looking at this chart and it kind of looks like it's edging up and out of a consolidation that it's been in over the past few weeks, which is better than you could say for most Septembers when the NASDAQ and the S&P usually take a step back. Perhaps you could opine on this, Dylan. Why isn't this September like it is usually for stocks, where people usually get spooked out? What's with the resiliency in the market this time around, given everything going on in the world, particularly in the United States right now?
Yeah, I mean, there is a lot going on and involves lots of sort of points of anxiety. You have the tariffs, you have the geopolitical shifting winds and tides and all those things. And you have sort of a tremendous amount of uncertainty regarding the number of rate cuts that shall follow the upcoming rate cut. We don't know what's going to happen with inflation. There's all sorts of questions about the labor market. I mean, there's just a tremendous amount of uncertainty everywhere, which should rationally create a much higher level of instability in the financial markets. I just think that you just have this one minor issue of the largest and most significant technological revolution in the history of all humanity, larger than the railroad, larger than electricity, larger than steel beams and skyscrapers and the internet and the telephone,
it would have to be, right?
Engine. You're dealing with the artificial intelligence supernova that no one fully comprehends. And as a result, it is powering an incredible upward momentum in all equity values, rationally or irrationally, and it renders any traditional analysis of underlying macroeconomic fundamental information as utterly irrelevant. In fact, a byproduct of the success of artificial intelligence shall be an incredible spike in unemployment and a wide variety of sort of outlier economic data as the entire infrastructure of the labor force is rearranged to eliminate all junior levels computer programming, all junior level financial analysis, all junior level communications, all junior level marketing, a tremendous amount of junior level legal work, all as we speak is in the process of evaporating, the consequences for which the world does not yet know. But the short-term reality is that there is a buoyance and ebullience and effervescence, if you will, that expresses itself in equity pricing and as such steamrolls those who are foolish enough to stand in their way with comments about jobs or inflation or tariffs or other things. And that is why this particular September, and I suspect October, shall be some of the best performing months of any September or any October that has ever been witnessed by man or woman at any time.
Oh, Ilya, we're going to hit Bank of America's target.
Interesting then that stocks haven't gone anywhere in a month.
It's a legendary hater.
It's early September, wise guy.
No, but it's, let's say Bank of America is right. We talked about their estimate for where the market will close in next year.
Mm-hmm.
We're talking 9,700, I think their target was.
Looking for 10 grand over here. They should ask this guy, 10 G's.
Well, that would just be unbelievable. You can't give a round number, right? It's like the 17 trillion, 2 on the nose.
Write it down.
It was 20.
Write it down.
Ilya, this all of a sudden is becoming a little bit of a different candle here as we go into the close because all of a sudden the high for the day, 65.32, we're going to be closing effectively at the high. I see a NASDAQ and an S&P, though, that are still somewhat range bound. So if you're a bear, right, as a bear, where are your tap out levels if this market's about to rev up? That's it. Just keep it to 65.42 and then the NASDAQ 24,068.
Yeah, I mean, obviously support and resistance as such are never a level. They're usually kind of like a squiggly line drawn with a shaky highlighter. But give or take the highs. If you have a convincing break of the highs, then obviously the consolidation has been a correction in time, let us say, rather than a correction in price. The markets have digested. The next leg of the move is upon us. That move will ostensibly have legs if it occurs. In the meantime, the risk reward is unmistakably better being short. There's just no question about it. Vol is incredibly cheap. You have all the reason in the world to see asymmetric opportunity, because if you're short, then you're going to be wrong very fast. If in fact you are wrong, you're within spitting distance of the highs. And you haven't gone anywhere in a month. And in not going anywhere, you got 90%, 91% certainty that you're getting this rate cut. In fact, a little sprinkling of a possibility that you're going to get 50. The markets are convinced we're going to get 3 more cuts next year. Earnings out of these Mag 7 names that Dylan loves so dearly, they've been pretty good. In fact, not a one of them missed expectations. Tesla was the soggiest. It met on EPS guidance, but beat on revenue. Not a one of them missed. Meta essentially took the doors off the hinges with their report. And still, stocks have gone nowhere, but the rate story has only gotten better. Why can't this market rally? It has the good news. What's going on? All the indications, aside from jobs data, seem to suggest, in fact, that the economy is reheating. That economic growth is picking up. That seems to be the story in the ISM numbers, in the S&P Global PMI numbers. What is it that this market hates so much that it can't rally for a month straight? So in my mind, if it does decide, and maybe it's just that it discounted all of the imaginable AI hopium, and now it needs perhaps some confirmation from the Fed that for all the many unknowns that we can't fathom from here, there will be cheap money to make those unknowns digestible. Maybe that's what it is. And that will set the markets off on the next leg higher after this consolidation. It could be. Or it could be that all of the AI hopium is indeed priced in, and the Fed is going to look at this and say, you're not getting all the rate cuts that you think you're getting. And then the cheap money isn't coming. And then everybody has to worry about all of those uncertainties, including uncertainties suddenly around a Supreme Court case that might invalidate most of the tariff architecture that we've spent 5 months attempting to digest. And so then there's, of course, the situation with the Fed and whether it will credibly provide any kind of policy support that anybody can believe in if the fiscal side ends up getting its way and taking over, at least in spirit, if not in fact. And so you have all the architecture you would need for the markets to go, right, okay, we already know all of this pie in the sky AI stuff. In fact, the fact that we're talking about it here means the markets have discounted it ages ago. And so with that in mind, the risk reward is fantastic. So if you're wrong fast, and you flip over and you get long. And if you're right, the opportunity is many times over what the risk is.
I'm not sure if I like it, Chris. I don't know if I like it at all. I'm not sure I like the use of the word hopium. I feel like there's a little bit of sarcasm coming from.
There might be a soupçon of sarcasm.
I feel like listen, he was entitled to the monologue. I took mine. He was allowed his, but I would just like to comment that I felt like there's the use of the word hopium was had a touch of condescension.
Dylan, there's a position sitting here in the follow account that was initiated 100 ES points ago at 64.35 long, purely out of spite against Ilya's antics.
Yeah.
Do we keep it on, given his recent diatribe?
Double it up. Double it. Every time he says hopium, I want you to double it.
Yeah, I mean, I have the kind of capital allocation for me to go on broken record mode.
Yeah, I mean, I'm out of directionally neutral things in stocks. That was just a one-day thing for this morning. And quite frankly, the way volatility dipped this morning in the market after the revisions to the jobs report, where it kind of just got pinned around 6,500, I was at 80% plus target profit in the SPX short iron condor on the 0 DTE. So having mismanaged the reverse iron fly 0 DTE on Friday, when I was basically trying to get from 85 to 90% max profit on either side and ended up closing out a complete bust, I said, you know what, stick with the mechanics, got what I wanted, get out. And then this market rallied. So the only things that I had on today in the rally were the call spread in ES and then the MES long position here in the follow account. I'm totally comfortable sticking with them, although this feels kind of trappy if we're going to be forthright as we get ready for CPI on Thursday, because we haven't cleared the NFP high. The NASDAQ hasn't quite gotten, so it feels like we're going to make an attempt, right? The NASDAQ's going to make a drive for 24K. The S&P is going to try to spend some time above 6550. And if we can't hold there through the end of the week, is going into next week's non-farm payrolls report on a little bit of shakier footing. But in terms of the equity market move, right, we've now seen with these revisions, and I think this is the real story here, because it seems like we're 40 minutes in. I can't believe we haven't talked about this. How weak was the Biden economy last year? 911,000
fewer than expected.
911,000 fewer jobs in the April 24 to March 25 windows. This does not cover the Trump presidency, but it follows on last year when the initial revisions were 818,000 jobs lower. And then when we ultimately round out into the final form of that report, I believe it was 598,000 with a final revised lower. So between last year's final revision and then this year's ultimate preliminary revision thus far, we're talking about 1.5 million fewer jobs in the final 2 years of the Biden presidency. I think, again, that's really worth contextualizing here. What does that mean in terms of the run rate for inflation during this, run rate for jobs during this window? The prior jobs growth was 147,000 jobs per month based on the data that we had for that window, April 24 to March 25. Now, less than half, only 71,000. Ilya, if we think about all of the releases that we've had over the past year, okay, and you lob 71,000, if you lob off 76,000 jobs per month, which is what we effectively just did, okay, you're not talking about a Federal Reserve that may be considering cutting rates in September. You're talking about a Fed that should have been cutting in March, in June, in July. It should have been cutting.
And then
last
some
summer.
of us get guff for questioning the strength of the economy and the likelihood of recession risk. The markets and the economy are, of course, not the same thing. But this is exactly the kind of thing that you get in the anecdotal data, like the PMIs last year, that you don't get in the official data, that keeps the Fed from cutting and that gets the markets going. You need to get a move on here.
Get a move on here, though. We joke tongue-in-cheek over the summer that we're going to get 0 or we're going to get 50. And it feels like last summer deja vu all over again.
Yep.
The only question is whether or not it's a maintenance cut or a recession cut. Given what we've seen today, Ilya, do you think the market's gearing up for a recession cut or a maintenance cut when the Fed cuts next week by whatever degree it does?
I think that will depend very, very strongly on what shows up in the SEP. I think the markets care much more about the SEP than they care about the actual move. I think the move is priced in. The markets are, at this point, sitting at about 60 basis points for the year. So they're a little bit under 50-50 on a third cut. They know that, though, that the 50 basis points that the Fed's been telling them about since December of last year, they know that's coming. There's no controversy here. The question is, what's going to be in the SEP? And I think if what's in the SEP looks scary, it can look scary in two ways. If the Fed goes from seeing 1 cut in June to now seeing like 3, I think that would be scary. I think the markets would look at that and go, oh my God, they missed recession.
Okay, hold on a second. But if we get to 3 for next year,
yeah,
that is going to require.
Markets are already there.
Markets are there, but for the Fed to actually get there themselves, it's going to require 8 members. This comes from Rand Max Neil data. It's going to take 8 members to lower their year-end projections for 2026 to 3%.
Which is why it's not going to happen.
But they could do that over 2 meetings.
They could. Well, the next update would be in December.
Okay, I'm saying they can do that over 2 meetings in which an SEP is produced. They could signal next year that they're at 2 to 2.5, and then in December they say that 3 is coming, and so the market says, okay, the Fed's not there yet, but directionally they're moving towards we are, so they get the picture.
And this is exactly what they want to see. I think what the markets want is for the Fed to go from 25 to 50. They want to see that there is movement in the direction of the market's forecast. But the other way that the Fed can spook the bejesus out of everybody is they stay at 25 basis points. And they say, well, actually, have you seen the PPI data? This inflation isn't going anywhere. Have you seen the second quarter GDP data? All of the things that were keeping tariff inflation at bay, the front running of them and the building of inventories, that's already going in reverse in the second quarter's GDP data. Never mind thereafter. The the barrier that wholesalers decided to put on their back and insulate consumers. That disinflationary force, that's now spent as of July. So I think the Fed looks at this and goes, well, if we were worried about pass along inflation before, we're doubly concerned about it now because we can actually see it. Before then, it was hypothetical. Now it's in front of our face. Are we going to commit to more rate cuts and encourage the markets to bake it in further? Would that be the thing we want to communicate? No. We want to tell the markets, hey, don't you dare build out inflation expectations. And so with that, they stay at 25 basis points and the markets go, but we want 75. And that's a rug pull.
I don't like his attitude one bit. Don't like it. Don't want to hear about it.
Guys, we have 15 minutes left here. Let's change our focus. I read a really interesting article on The Atlantic yesterday, Dylan, which I thought that would be interesting to discuss here because it's less about the short-term macro and more about this AI revolution. It comes from Annie Lowry. The job market's hell. Young people are using ChatGPT to write their applications. HR is using AI to read them, and no one is getting hired here. She's painting
That's
a paradox, right?
Exhibit A, sir. Exhibit A.
That's fantastic writing, by the way. Just
this
AI wrote that article.
Okay, so let me give the background here because
kudos, Skynet.
You may not be able to get the full view, but basically she says on the surface, the U.S. economy looks healthy, 4.3% unemployment rate, wages have been ticking up, corporate profits are higher, wages in real terms, right, outstripping inflation. But when you look at this, hiring is stalled, young people in particular, the college unemployment rate this year or recent graduate unemployment rate is going to tick north of 5%. For context, where it was in pre-pandemic 2019, the unemployment rate for new college graduates was about 3.3%. Okay, so structurally it's a weaker market, and obviously new college graduates have a higher unemployment rate than the broader economy, which still sees a 4.3% unemployment rate. So I don't know. I mean, first off, I'm trying to figure out whether or not this is should companies even be using AI in screening, Dylan, like this? How are people going to get around this, though? Because if we are really in a world where young people are using ChatGPT,
there's no more people. It's all robots submitting and robots reading. The whole thing is now been reduced to human beings using AI to draft resumes and proposals that are then sent to other human beings using robots to evaluate those proposals. And I'm being a little bit sarcastic right now, but I really think that we're coming to a place, I believe we are very rapidly going to come to a place where face-to-face human interaction and human dynamics are going to be at an incredible premium, because I actually believe that we're going to see the value of digital or written, that basically non-physical interaction is going to move to a zero value proposition, because even if the resume or the proposal was not written by AI, or if the evaluation or contract award is not made by AI, it's going to be presumed that it is.
Welcome to the dark side, sir.
Sorry?
So
welcome to the dark side, sir.
Elliot,
I agree completely.
So I think you're going to see an incredible premium on, I need to sit in the same room with Ilya and talk to him and ask him, how is he going to navigate this chat? How is he going to help me, this company, this organization, this college, this institution, whatever it is, or whoever's on whichever side hiring a contract, awarding a contract, or pitching a contract or a job or whatever. It is, how is this individual going to help this institution solve this problem? And how are they going to use AI to do it?
So I have 5 questions here that I want to talk about and give you guys each a minute to respond as we wrap up the last 10 minutes.
I just believe that I just want to finish. I think young people are in the greatest peril. I just think that all those entry level jobs, as I mentioned, finance, programming, communications, legal, marketing, are fucked.
Okay, so let's start there though.
An entry level job is going to become something else.
Right. So for younger workers facing these longer job searches and fewer stable career paths, how sustainable is the current system that we're dealing with here if this is going to be such a disruptive technology? Are we risking eroding generational trust in markets and capitalism itself if we're pointing to a labor market that no longer functions in service of the broader economy, Dylan?
Yes. Next question.
In the short term, yes. In the long term, no. This is exactly the same thing as what happened to the music industry with the advent of streaming. Eventually, whereas before you had to come see the man about a record contract, and the man would use the incredible resources of a record label and a media company to push things out there. And when streaming occurred, all of a sudden it disrupted that ecosystem tremendously. Outlays on artists fell away. All of a sudden, everything started to get worked down to the lowest common denominator of ringtone nonsense until individual musicians figured out that you don't need the man, that you can make money as a solo entity, because
SoundCloud,
now
YouTube,
with
Spotify.
technology you have all the ways to market.
But isn't that an economic revolution? Isn't that an entirely new economy?
Of course it is. Of course it is. But but what happened to musicians in that transition is already happening to filmmakers that don't need studios,
for sure. Yeah.
and will increasingly happen for everyone, where I don't need.
What happens to the millions of young people that sort of paraded through the financial institutions, the big PR firms, the ad agencies?
There's going to be. So I say in the short term, I think you're absolutely right. But what that transitions into is any individual person doesn't need an entry-level job because they're able to go from ideation to realization thanks to Skynet. And so the time when you have to go and you need
some hierarchy of an
for
institution.
scale.
I hear it. I got that.
There's a much different gap there. You can get a lot more done as an individual and go fully to market with your services, whatever they are. Because I think you're absolutely right. The premium is not on doing stuff, it's on thinking stuff, because the base of doing stuff Skynet will do for you.
All right, so if this article is an indication of where we're going, if workers, young or old, can't reliably connect with employers in supposedly a healthy economy with a 4.3% unemployment rate, is the labor market still functioning as a credible allocator of opportunity, or is it breaking down something closer to a lottery system, Dylan, or something worse like a neo-Gilded Age where power or proximity to power?
It is an irrelevant piece of data that exists only as a placeholder in the mind of a generation that will die off in the next 20 years and it will go away. And there'll be different metrics. The labor market as it stands right now, as the way it is presently measured, is relevant only because it is institutionally habituated to my generation and those older than me, and even you guys' generation. But the generation beneath you guys, and certainly the generation beneath them, this measure of the labor market will be there is going to be a compulsion for an entirely new set of economic metrics in order to have any indication of the health of the economy, because the old metrics will prove to be irrelevant.
Well, and you'll probably, as more and more people are able to generate value without being employed by anyone, and likely don't need to be employed by anyone for much longer until what they provide requires the scale of a larger organization where they couldn't get to market by themselves at that point, you're probably going to start to have to measure output, not necessarily in terms of employment, as you are in terms of things like consumption, investment, and employment as an input. I mean, GDP is still GDP, but how you get to forecasting GDP probably starts being less about the increase in non-farm payrolls and the unemployment rate, and things like retail sales become very big numbers.
Thinking about the slowdown in the labor market, right? Last year, if we're talking about an economy growing at 70,000 jobs a month, 71,000, 72,000 jobs a month, that's basically frozen.
Yeah.
And that's more or less been the run rate this year so far. It's been very slow, sluggish. Again, no one is getting hired here. Dylan, I can't help but go back to this notion that if the private sector is going to remain in a low higher equilibrium status, and maybe Trump's deportations ultimately turn this around, right? We remove such a substantial supply of labor from the market. It's going to lift wages across the board. It pulls in workers off the sidelines who haven't otherwise, removed themselves from the labor force. Okay. But if the private sector remains in a low hiring equilibrium, should the government, or do you think will the government have to step in through an FDR stylized works progress administration or something more unique like UBI? And I can't keep shaking UBI as this conversation evolves over time.
Yeah, I mean, there's going to have to be institutional solutions, whether those happen at the village and city level, at the church and university and corporate level, at the state and county level, or the federal level. I have no idea. I have incredibly low confidence in I believe the gap between competence and awareness in the government and economic reality of a picture that Ilya portrays, I think, very well. I think Ilya's description is probably, somewhat imprecise, but generally correct, which is logical for any sort of future prognostication. But you're going to have, let's just say it's sort of the continued or even accelerated atomization of the economy, of all these individual single sole proprietorships that are using sort of some creative or some product or
it's like
service.
Adam Smith 2.0.
Yeah.
It's the Wealth of Nations 2.0.
And so how is that the transition? You're on the verge of one of the most powerful creative renaissances. I don't know if renaissances is a word. You're on the verge.
I like it and I'll take it.
On one of the most powerful creative renaissance in the history of mankind, and also maybe one of the greatest human catastrophes of lost potential because of the inability to help people adapt.
We hopefully have learned something from globalization, which was this level of transformative good. And I agree. The likelihood is we haven't learned.
When I say back in the day, and I joke and say back in the day 2 weeks ago, I'm not really joking. The rate of change is so much higher than the human ability to adapt. And in the free market, among the relatively highly engaged, highly read, highly active professional class, let's say, which is sort of the most adapted and the most resource independent and the most connected, and they're all behind. Everybody's behind. And so, if the leading edge of the most adaptable layer of the economy is behind, that means every other layer, whether it's older people, younger people, whatever the layer is less. And there's no layer that's more behind than the government, who's sitting in a delusional insanity of some institutional structure that has them completely detached from the reality of generations of 22-year-olds for whom millions of jobs are evaporating by the day.
I guess the question that I have isn't that any of those things are incorrect, because I think they are absolutely correct. I think the question is, when has it ever been otherwise? When you get a transformational thing like this,
the rate of change, just the rate of change. The rate of change.
Well, and you'd expect it to accumulate. right? You'd expect the rate of change to accumulate because each revolution builds upon itself, right? We couldn't have invented telecoms.
But we weren't ready
the
for the
steam
horse and
engine.
buggy to the car. We were, I mean, and that took, this rate of change is by the day. It's nuts.
All right. Well, we will get back to arguing about the rate of change around horses and buggies tomorrow because overtime is out of time. We'll be back same time, same place, 4 p.m. Eastern, 3 Central, right after last call. Interesting conversation here, guys, today.
I want to do a new podcast, Two Dirty Shirts.
I have no idea to which you're referring. For Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Two Shirts Vecchio in New York. After this, a brief break. More Tasty Live coming at you. Ilya Spivak with Macro Money up next.
The markets mark time on Wall Street today, although there is a little bit of positive drift as we get ready for U.S. inflation data. The biggest piece of event risk this week, and ostensibly the last thing the markets need to see before they get hit over the head with a Fed policy announcement next week that they have been hoping and praying will restart rate cuts. What's coming up first? We're going to break it all down here on this first episode of our two-day inflation series. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we'll begin with a conversation about the Producer Price Index, or PPI. That's the first part of this story this week. And we'll start off there, taking a look at, first of all, how the markets are setting up before the data, what the data might do, and why the markets are likely to care about it. And then how I, at least, am going to stay positioned in the markets for the data and what I'm looking to see with those trades that I have on. So let's start with what the markets did today. And of course, I took this snapshot a little bit through the post-close jostling and finalizing in the futures market. So don't hold me to the absolute second decimal spot for all of this. But this gives you a sense for what the markets did today. Some narrow gains for the S&P and the NASDAQ, relatively quiet overall. We get a move higher in yield, so bonds take a step back, but not a significant one. The explosive gains we saw coming out of last week still very much the dominant trajectory. Crude oil wiggles up a little bit, up 0.67%. That may or may not have anything to do with another round of shenanigans in the Middle East. There was, of course, an Israeli strike on Hamas leadership in Doha, Qatar. So it's certainly something to keep an eye on here. But at the overall sort of level, crude oil is relatively little changed and still, for the most part, stuck at the midpoint of a range that it's occupied since at least, it would seem, the beginning of the year. The top of the range somewhere in the vicinity of 74. And that's if you look at the extreme high, and the sort of upper 72, 73 area, if you look at the closes. And on the downside, around 54. And the midpoint of that range, the place where things have increasingly anchored around, seems to be somewhere around 62 to 63. And we've been stuck with very little movement around that level, basically now, as a sort of oscillation point since let's call it the second half of April. It was first a kind of barrier on the upside, then we broke higher, and now it's a barrier on the downside, and we continue to oscillate within very little distance of that center line, and let's call it 54 to 74, the outer bounds. So yes, crude oil wiggled higher. No, it didn't really do anything particularly convincing or set any kind of a meaningful path in a clear direction. Gold down a little bit after hitting a record high, off about 0.2%. So it looks like the very spirited momentum we've seen is cooling a little, at least in front of the data that's upcoming. And the U.S. dollar managing a relatively spirited recovery here, up almost 0.5% against the euro, and flat against the yen, having been down significantly overnight. Bitcoin down 0.77%. If we look at how all of this filters into the performance for the week, we can see here that there's a sort of recovery, at least in some parts of the architecture here relative to last week. We can see, of course, last week a significant decline in yields. Bonds went higher. Now we can see yields are correcting a little bit in the opposite direction as the markets digest. We can see gold is up on the week, so momentum continues there after what we saw last week. The dollar is a little bit better here, it seems, on the whole. So euro is a little bit lower, yen is a little bit lower. For the yen, this is continuation. For the euro, this is a little bit of a step back amid its attempt to recover, and stocks are seemingly finding a little bit more momentum as they correct, but as ever, we are stuck in the same range where we've been basically since mid-August, when that month's CPI data release wave gave us what we are now angling for. Next month's rate, or this month's, next week's, I should say, rate cut. So, as the markets wait, this is what they're waiting for. And the first episode here, as we say, is the producer price index, this. And then we're going to get the headline consumer inflation data on Thursday. So what is it that we're expecting here? We can see there was a massive surge in PPI in July, 0.9%. We're looking for a little bit of a cool down there. The core seen at a little bit of a lower level, from 3.7 down to 3.5, but the headline seen holding this 5-month high that it set in July at 3.3%. And here's July's data. You can see the 0.9% surge. It ends up being the largest jump in close to 3 years here. And that, of course, tells us, first and foremost, that whereas at the beginning of the year there was some concern around the tariffs, but companies were not prepared to make that concern the problem for consumers, because of course they didn't want to destroy demand until they saw what the architecture of policy would really look like. As of July, they stopped eating the tariff costs in margins and started to pass it on. Here's the year-on-year number, and here's that 5-month high that we're expected to hold at 3.3%. In July, that was the highest since February, and we're expected to hold this level. Going back to the month-on-month readings, you can see here is the overall margins data within July's release, and you can see here a sharp rise in margins. This final demand trade services component measures where the margins for wholesalers are And you can see here they've expanded here rapidly. So you can see that they're increasing their prices as input costs change. If you go earlier in the supply chain, this is intermediate demand, whereas this is final demand. So this is the wholesalers that are closest to retail. This is the beginning of the supply chain and where tariff costs occur initially. You can see here there was a massive, massive decline in margins because businesses basically said, we are going to take these costs upon ourselves and we're not going to pass them down to even wholesalers later in the supply chain, never mind to consumers. Now you can see there is a clear change. And while at the beginning of the year there was this attempt to insulate from tariffs, it looks like that's run out of road now. Moreover, at the same time, the GDP data for the second quarter tells us that the other major thing keeping consumers insulated from tariff inflation is also falling away. So in the first quarter, you can see here, there was a massive rise in imports. And since imports are something you subtract from overall GDP, GDP is consumption plus government spending plus investment plus net exports. Net exports is exports minus imports. So imports is something that you take away from GDP. So you can see that the fact that we have a big down bar here tells you there was a massive increase in imports, which ended up being a downdraft on GDP and gave us a negative reading in the first quarter. That was companies attempting to front run these tariffs. You can see that all of that ended up going into inventory. So there was a giant jump here, a jump like we haven't seen in a very long time here, clearly, in inventories, because all of these imports didn't go to service immediate demand. They went to stockpiling so that companies could sell things at the pre-tariff rates longer. Well, look at the second quarter, and all of a sudden you see imports are a big up bar. That means they fell hard. Meanwhile, inventories come down. And exports, as you can see, continue to be essentially a non-factor. The fact that you have these imports collapsing here tells you companies are not restocking these inventories. They're spending them down. And so you're running out inherently of the supply of pre-tariff goods. That's another thing that was keeping consumers somewhat insulated because there were these inventories at the lower costs, and those inventories are being pulled down already in the second quarter. Never mind what's already occurring in the third. So the concern here clearly is that as companies are passing on these costs, and as they run out of inventory to insulate consumers from these costs, you're going to get more inflation, and exactly the kind of thing that the Fed is concerned about. Weak jobs and inflation at the same time. And of course, we've heard time and time again from the Fed that yes, they're beginning to become increasingly concerned about the labor market, but also that they are not going to allow these tariffs to go from a one-off tariff shock to inflation to lasting inflation expectation gains. And so this, of course, is precisely the kind of stage setting that is critical for next week's Fed policy announcement. Now, that's not because a rate cut might get taken off the table. That much seems almost certainly not a viable possibility. We can see the likelihood of at least a 25 basis point cut at next week's meeting is now north of 90% and approaching 92%. And the edge case here isn't that rates will stay on hold, but that the Fed will actually cut by 50 basis points. The likelihood of that, 8.2%. The bigger issue is what happens thereafter. So we've pointed out before, the markets are betting on a lot more easing next year than the Fed has allowed for. So the market sees 77 basis points in rate cuts next year, whereas the Fed, in its latest forecasting, sees only 25 basis points. You can see here the move from 3.9 to 3.6 is a change of 0.3 or a rounded off 0.25. So the major issue here is that the markets and the Fed are at a meaningful disconnect for next year. And if this PPI data is going to give us more of this and more of this, well, then the expectation will be that consumer prices will go higher too. And it, of course, is helpful in that sense. It makes PPI that much more important this time that it comes before the CPI release. Whereas, for example, last month, CPI came first. And so here, the information that we see in the leading survey data becomes all the more pertinent. We can see here the spirited rise in the price index from the ISM report on services here is telling us just about what we would expect to see. There is about a 2-month lag between this and the major measures of consumer inflation, CPI and PCE. So we can see here, once we lag them 2 months, these things start to line up, and we can see that what seems to be foretold here coming up is an inflationary surge. And that will be exactly the kind of thing that you'd expect to see as tariff costs start to actually arrive for consumers after having been delayed by this eating of the margins for wholesalers, and of course by this front running of the tariffs and inventory build out. What does that mean from a practical trading perspective, and how do you position, or how at least am I positioned for this? Well, you can see here, as we've discussed before, the relationship between Fed policy expectations and stock markets. And it's not difficult to see what's going on here with the naked eye. You can see at the beginning of the year, right around February or so, where the markets start to see business confidence falling off, consumer confidence falling off around the rollout of the first batch of tariffs. You can see that stocks don't like it, and there's clearly a sense that what this will mean is something negative for the business cycle, because there is a shift significantly lower on policy expectations. And as a matter of fact, we end up by the bottom here in early April at 137 basis points in rate cuts being baked in, which, shock of shocks, right around where we are now. What's interesting, though, is that these things move in tandem until they don't. This, of course, is that Liberation Day shock, and ultimately a sentiment recovery. Because what happens is the president steps back once the markets hit a level of panic, and there's a 90-day pause, and there's a sense that the White House is, in fact, responsive to some degree of market discipline. But consider what then occurs. As sentiment recovers, there is a clawing back of some monetary stimulus, but it runs out of road right around here. That lines up with stocks recovering to here, which lines up very nicely with where the shock began in the first place, right there. And then when we look at what then occurs in markets, we then see this outlook become increasingly more dovish, just not for this year, for 2025, where things at this point anchor to where they started, back here. So the growth scare is fully reset. Here's where the growth scare is. Here's where the policy baseline is, down about 50 basis points. Everything resets. Stocks reset. Expectations for this year for the Fed reset. We end up right around where we were before. But what the markets then do is they start to bake in tons and tons of easing for 2026. And the Fed has not endorsed it. But the markets clearly think it's coming. Not surprisingly, that has been a very convincing lift on equities, which of course one might expect were one to look at an expansive, speculative easing cycle that the Fed is yet to make official, leaving, needless to say, room for that speculation to occur. Now, maybe the dollar has already sniffed out that we are unlikely to get quite so much easing, because we can see that the dollar stopped falling as early as the beginning of July and hasn't made a new low since, even as expectations have become more dovish. So perhaps the dollar reasoned that we're already at the place beyond which we will not go. And perhaps the dollar already found this out as recently as 2 months ago. And this is why it stopped falling, having fallen very clearly in line with this dovish shift in expectations. And so perhaps what we're setting up for, if in fact we're going to see something like this, is the markets having to work this back rather than the Fed having to mark this up. And so, needless to say, that puts all of what we saw here in danger. If in fact a significant portion of it owes to this dovish shift in expectations, which it most certainly seems to. So with that in mind, if the PPI data surprises on the upside here, and the pass-through of tariff costs starts to mount, well, then the expectation for the rate cut next week doesn't change. But the likelihood that the Fed goes the market's way in endorsing all of this starts to fall away. And perhaps so do stock markets. So from a positioning perspective here, I am still long the US dollar. This is short Aussie, short pound, short euro, short the Canadian dollar. And thankfully, that went a little bit more so my way at the start of the week here after that post-jobs data dollar pullback. I am likewise long gold because I think its move has been somewhat more linked with uncertainty and less with specific Fed policy outcomes, which is why I think it can hold up reasonably well here, even as the Fed outlook is revised. But I am short Bitcoin through IBIT, the ETF, essentially looking for a risk-off sort of outcome from here. And of course, that's likewise reflected in these put verticals in the Qs or NASDAQ and SPY, S&P 500, and still long at the long end of the yield curve, essentially expecting those rate cuts that the markets want so badly to get pushed further out in time and to keep yields at the long end capped, even as perhaps there is a dilution of dovish sentiment at the front end. With that, we have macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow for episode 2, CPI. Happy trading.
What is going on, everybody, and welcome back to Risk and Reward. Today is Tuesday, just before some PPI announcements, some CPI announcements later this week. I mean, we even had the Apple release today. But before we get into all that, Gus, my brother, how we doing?
Oh man, well, doing good as always. I am reporting to you live from my apartment, a short way from our studio right now, as I unfortunately have COVID. This is something that has just started today, but and I can't prove it, but I think Errol poisoned me because he likes my side of the desk in that studio better. So I'm pretty sure that Errol had some kind of hand in this.
I've been caught. I'm not gonna lie. Whenever I did hop on here after I was done speaking, I looked over to see if you were right there, and I was like, oh. not even used to that already. Just already used to being face to face. But hope you're feeling better here soon, brother. But we're almost midday into the week, so we're almost there. We're almost there.
Yeah, we're getting through, and this Apple event gives us plenty to talk about today. Something of a somewhere between a nothing burger and a something burger. I don't know exactly where to place it on that spectrum, but I'm excited to get into it and talk some Apple.
I mean, I guess I'd put it into a little bit of a nothing burger today. What's going on, everybody else? Big deal. Data trader.
Well,
Bob
it's
Solid,
almost
everybody.
like we have to start moving the goalpost for what is a nothing burger for Apple, because I mean I've gone on record before, and I know that you share the same sentiment, saying that Apple really has stagnated. I feel like in terms of their innovation, this is not the Apple that we knew in the 90s and 2000s that was constantly doing something groundbreaking. But at the same time, I mean, in fairness to them, it's not like anybody has come and taken their market share. It's not like, I mean, they still are doing new things. They continue to update things. It's just we're kind of in a awkward spot. I don't know how they could innovate. It's why they've been great for so long, is because they can innovate in ways that I don't know how. But yeah, every time we do all this build up and run up to one of these events, and then they just say the phone is thinner and has more storage and the camera is better, it's kind of underwhelming.
It kind of feels like Apple, because I don't want to say it was disappointing. Like if I were to take the same perspective into every single Apple event, I'd probably be disappointed. Sometimes I think I'm a little bit more surprised, and I won't give away too much. We'll just go ahead and get into the slides here. The Apple hype continues. If you're not familiar, the Apple conference was today, where they released the new iPhone, some of the features for the new iPhone, and some of their plans moving forward. And they did that today, and today we're going to touch on some of the details as to what we can look forward to for Apple. So I know a lot of us are in the Apple ecosystem, but if you did watch today, I don't know if there was anything that stood out to you, but the main thing that stood out to me right off the bat, and we'll get into the details here, is no mention of AI. If I had to guess, there would have been a mention of AI. I probably would have. Apple seems really conservative when it comes to new ideas. I know even them stepping into the Vision Pro was like, yo, Apple, that's kind of like not a very solid floor you're stepping on there. But I was really surprised they didn't get into the AI part of things with Apple and what they might be doing over there. So before we get into the details, was there anything that you were hoping for them to touch on as a consumer, or would have been interested to hear from them, at least?
I mean, yeah, I think it's AI, and it's such a funny niche little thing, but man, it's Siri. We have got to improve Siri. I cannot believe how terrible Siri still is, how incapable she still is of very basic tasks, simple questions, and I cannot believe that we do not have an AI integration into Siri yet. I don't even need ChatGPT, man. Give me Claude.
No, keep going.
Give me Gemini. Put whatever you want in there. Partner with whoever you want. I guess if Google partnered with Apple these days, they'd pull out an antitrust suit on them. But it's just, I don't understand how Siri hasn't caught up. And this is such a small, little tiny hill to die on, but I will die on it. I need to be able to just ask my phone questions. I can't feel like I'm living in the future until I can say, Jarvis, tell me this. And then that happens. It doesn't work.
Yeah. I'm seeing here.
I'm excited for the new AirPods, though.
I'm very excited with the AirPods. The AirPods is probably one of Apple's, I think, the best product they've ever. Not only that, I think they've dominated that niche. I have to give it a grain of salt. I haven't used other wireless headphones, so I bet there's some amazing ones out there. But for the AirPods, at least, I mean, I don't think it's a coincidence. That alone is like $1 billion market cap for Apple for a single product line.
I have used some other wireless headphones, and there's certainly ones that can hang, namely the Bose, I don't know exactly what they're called, but the Bose AirPod equivalent product are very good, but they just aren't quite there. The AirPods, I mean, I have no understanding of how they managed to create that type of noise cancellation with that small of a product. I mean, it is really nutty. If you haven't used a pair of AirPod Pro 2s before, I mean, it's very, very interesting, and they are very robust. They have the conversation detection thing so that you don't hear anything going on around you, but if someone walks up and starts talking right to you, they'll turn your volume down and take off the noise cancellation so you can hear that person. It's very interesting, and what I'm most excited about with the new ones that are coming is that I'm seeing that they have heartbeat sensors in them, which is interesting to me.
That is, so it's gonna try and get your pulse from the AirPods, is what it's gonna.
Which is interesting to me because I would kind of like to move away from my Apple Watch. I don't know if I would get a new one. I may continue wearing it, but I don't really think I get a particular ton of utility out of it. It's nice being able to check texts, with just a glance at my wrist, and it's nice for workouts. And the main reason that I've continued to keep it and use it as much as I do is for when I lift. They've made a good system with these rings, man. I really want to close my rings every day, and so So that's kind of my only application for it now. But now, if we can do all of that through my AirPods in my ears and me tracking my heart rate and my workout and doing all those things that way, I might be able to move on from the watch, which would be cool. I could stop looking like a spy kid and get a real watch like a man.
All right, Ben 10. No, but last question before we shift gears here. With the Apple Watch, one thing I never liked was being in the gym or doing something athletic, especially lifting weights with the Apple Watch on my wrist as well. Is that kind of what you're referring to?
No, I don't really mind its presence on my wrist. I think it doesn't, weird first thing to go to, but it doesn't ever make sense in a fashion context. And then beyond that, I just don't get a ton of utility out of it. I was sitting there in the gym the other day actually going to start my workout, and I had a moment where I scrolled through all the apps on my watch, and I was like, I haven't even used 98% of my phone apps on my watch. Like, I just don't get that much utility out of it. It is, and like I said, it is nice to just be able to check a text without pulling your phone out of your pocket. Watch vibrates, check that. Do I need to respond right now or
not? A little
not?
Haptic touch, convenient.
Yeah.
We'll give it
and I'll tell you what, too, that has a lot of utility if you're like with people or like, in some kind of situation where it may be inappropriate to check your phone. Like, weird one to pull out, but church. I stay informed. I stay informed while I'm in church because my watch has stuff popping up on it, which maybe that's not something I should be bragging about. Perhaps I should turn everything on
this is
airplane
confessions.
mode,
Go ahead, brother. Yeah. No. I did just see G-Shock being mentioned, and I just got a shout out Laid Back Trader, because if you're from the G-Shock era, you're just a real one, and that's all I got to say about that. That was the Rollies back in the day, the G-Shock. So
G-Shocks were fire. G-Shock still has some nice watches now.
G-Shocks are coming back around.
People like their G-Shocks.
They're coming back around.
G-Shock, I respect it. I think you could probably run over that thing with a semi-truck.
You know what?
This Apple Watch with a semi-truck, it wouldn't survive.
You know what kind of vibe G-Shocks give me? They kind of that and Richard Millie's. So either Richard Millie's give Ben 10 vibes or the other way around. But Richard Millie's always just seemed like such a toy watch kind of to me, and G-Shocks just always popped. Not that I have a Richard Millie and could like give personal experience as to my experience with one, but just based off my perception. That's what it is.
Yeah, in my experience, it's definitely much closer to a Richard Millie than it is a Rolex or an Audemars. In my collection.
Yeah, it's like, that's why I didn't like it. That's why I went with the G-Shock instead of the Richard Millie or the Rolex.
Yeah, it's like, why would I pay all this money for a Richard Millie? Maybe when I was a boy, but since I've grown, I've come to realize it's best not to spend your money on these frivolous things.
Yeah, exactly. Got to make the smart decisions here because we gotta be able to buy shares like Apple. But I don't know if you've seen, Speed was actually over here in Chicago the other day. And I bring that up because I don't know if the Wall Street of Einstein, you know who I'm talking about, the guy with the hair, Wall Street of Einstein. I'd seen a clip of him talking to Speed, talking about how, if you would have, bought shares of Apple instead of buying the new iPhone after X amount of years, you would have ended up with X amount. And I actually thought that was pretty cool. Just a sidebar before we get into the info here. I thought that was kind of cool because obviously he's trying to put people on that are watching his stream, which is a lot of young individuals on Speed's stream.
Yeah. I hope that he has an excellent financial management team around him. I hope whoever he has managing his money is trustworthy.
Yeah.
Because there's a lot of it. And it would be very easy to flip his net worth from starting with an M to starting with a B if he plays his cards right over the next 20 years.
Oh, you're talking Speed?
Yes.
Oh,
yes.
Yeah. I mean, if we have some time at the end, we can touch on that. But I mean, just the ruckus Speed was calling, just pulling up to Chicago, everyone just like, I've never seen somebody have so much pull like Speed unless it was like the A-list celebrities like 15 years ago.
It is very interesting, the ability that these streamers have to pull people like more than many A-list celebrities. Right. Just about any NBA player not named LeBron James and they go walking down the street, they are not going to pull the kind of crowd that Speed is pulling everywhere he goes, in China, in Thailand, you name it. He's doing this everywhere. It's pretty remarkable.
That's really valid. And when you brought that up, someone said the other day, a lot of professional athletes want to be recognized if it wasn't like the star player on their team or whatever the case was. And I was like, I didn't even realize how many professional athletes that are in the NBA or in the NFL that I don't actually know by first or last name.
Oh yeah, I was at the casino one time here in Chicago playing roulette, and there was a couple of athletic-looking guys next to me, but I didn't think a thing of it. And then finally, like 2 hours in, I turned to these guys and I'm like, "So what do you guys do for work?" They're like, "Oh, we're on the Patriots." I was like, "Oh, word, that's fire."
And that's just how it is sometimes. I have a very similar story to a guy that was playing with the Bucks. He just sweats, slides. I was like, "You look like an athlete and look like you could eat me." I was like, "What do you do?" He's like, "I play football, high school down there." No, Patriots. I'm like, Patriots, the Bucks. Very similar story.
It's interesting, and I mean, it's like Michael Jackson level stuff. I mean, if you guys watching right now think that I'm crazy or like being dramatic here, go search speed in streets of China or pick literally any country, and he's probably been there and probably done this there. It is nuts. I mean, he's pulling like shutting down city centers because there's 10,000 people on the street. It's nuts.
I mean, I thought it was wild when he had went over to China. Some plane thing.
And it's really interesting too, because these streamers have such a way of like working their way into culture. Like I have never watched 1 second of a Speed stream, an Aiden Ross stream, a Kai Cenat stream, but I am still incredibly aware of what they are all doing all the time. Like not even by choice. I don't follow fan accounts. I don't try to keep up. It just comes to you. These guys are like, it's very interesting.
Can't get away. There's a little bit of our generation, a little bit of our culture we touched on there. We can go ahead and jump over to the platform here. I know we had some of the details with Apple there. I wasn't trading Apple this week. I know we had a couple guys put on some zebras to the downside on Apple, so I know that's doing really well for them at least. There was a pop right ahead of the announcement, and then when they started talking about a lot of the details on the iPhone 17 itself, other products they might be coming out with and future plans, then we kind of got like a sell the news kind of event. Were you watching this live time, or you kind of just had it on the side?
I was watching the share price, yes. I was not watching the Apple presentation, but yeah, and I don't know when we're going to stop doing this with Apple. I mean, it ties back to kind of what I was saying at the beginning of this, that I feel like we need to move the goalposts for what is and is not a slam dunk for Apple, because they're not, I mean, it's like we go into every single Apple event with the mentality that they're going to release a new product, like something we have not ever seen before, the way that it was in like 2000 through 2012 when they're a computer company and suddenly they're like, look at this phone. This is the most revolutionary thing you've ever seen. And
you mean
this iPod in the middle of those two.
Oh, yeah, you're right. The iPhone first and iPod.
Yeah, they're ripping those things. So it's like I feel like we can't be expecting that level of innovation, but the market continues to project as though that is kind of what we're expecting, and it's interesting.
You know what kind of same vibe or same type of evolution, I guess, for lack of a better phrase, that I've seen play out same way in like Call of Duty. It's the same behaviors I've experienced in myself, at least. It's like every year growing up as a kid since maybe I was like 9 or 10, waiting for the new Call of Duty to drop every single October, every single November was like the coolest thing in the world. You go out to GameStop, you'd wait in the line. Sometimes it's really cold, but they would release a limited amount of video games at that location at midnight. So it was like a thing in the Call of Duty community to go line up at your local GameStop to wait till sometimes 11. They might open the doors because Eastern time, if you're in Colorado, they're gonna open the doors a little bit early for you. So some people don't get the game and hop on the servers before you. All those kind of things. It was like a tradition for the community.
Yeah, absolutely. One of the regrets of my life that I've never been to a Call of Duty midnight release. I was just too young when that was a thing that you did. Anyway, you can go on.
No, yeah, and I barely was able to catch it. If I didn't have my oldest brother, which he was like 13 years older than me, I wouldn't have ever even experienced it one time if it wasn't for him. So shout out to him, even getting me into Call of Duty. But with that being said, you would do that, and you would do that,
and you'd be rewarded. I mean, the hype was there. It was real every year.
Yeah,
and
right.
The game was that innovative. Yeah.
Right. You're excited. You're doing that every single year, and then after some years go by, you start to realize, I don't know if we're getting older as individuals, we like video games, or we take less interest in video games, or if as an adult life priorities get in the way. But it's like these games don't hit the same, and it's like the games don't hit the same, but also they haven't really been very innovative. And it was like year after year, it's like, okay, I'm going to buy this Call of Duty one last time, and if it's not hitting, I'm not going to get the next one. But the next year, it's like you get excited again. I don't know if it's just that nostalgia that is helping sell their next product year after year to their loyal customer base. But it's the same way I view the Apple products. It was like we always had such a good experience in the past with this company, so you always got excited. It was just like your body started to get conditioned to these yearly cycles of them dropping something and being excited for that. But it just got really dull. But I just experienced the same type of behaviors with something like Call of Duty and Apple. It's like there's no more innovation. It's a new product. Everything's new, fresh, new updates. But it's like after 5 years, it's getting a little old without any type of revamp.
Yeah, I think that Call of Duty is an excellent analogy because it also does line up. And much like Apple, at a point you just run out of carrots and you run out of sticks. And what are you supposed to do? And in the case of a video game, the graphics can't get that much better every year. And then with Call of Duty too, yeah. I mean, in the beginning, you get zombies. That's this new innovative thing. And then zombies evolves more. We get perks. We get gobble gums. We get revelations. You get in multiplayer. We went to jetpacks. All of a sudden, that was like this whole new cool thing with Black Ops 3
I hated
with the
that. I
jetpacks.
hated that so much. I could not wait.
I liked the jetpacks.
But I thought it
That
was cool. I think it was just because it was gearing off of what I knew as Call of Duty. So I think I was just being a hater. Not that it was a bad game, but
sure. That's valid for sure. But yeah, at a point you just run out of rabbits you can pull out of the hat, and what are you supposed to do? And I think that Call of Duty and Apple both exist kind of in the same capacity, albeit one much smaller than the other, which is that even though the innovation has kind of left, you still continue buying it because you know that it's going to be a solid game. It's normal to you. It's what you're familiar with, and you still think that it's at least can hang in the market, and it makes more sense than changing. We're also at the time of year right now where everybody complains about the new 2K game. I think 2K26 just came out. I haven't bought one since like 21, but that is another one that is serious copy paste every year.
yeah, I mean, it was a very similar story with FIFA. I know we just seen Madden in the chat. If you want to get the work on Madden, let me know. It's not personal. FIFA, Madden, 2K. No, I'm just kidding. FIFA, Madden, 2K. 2K16 was one that was very popular and hasn't really been.
14 to 17 was like the golden age.
That's what I'm saying, and I feel like it's fell off. And when you brought 2K21 up, I was like, oh my gosh, we're so far away from the 2K15, 2K16, 2K17 era. I didn't even realize. But
yeah, man, decade ago, we're getting old. I remember getting all excited to get a PS4 so I could play, I think, 2K15 on it, something like that. That was when the PS4 was new.
That's insane. Don't even say that, Gus. Don't even say that. Don't even say that, brother. No. As we jump into the market here, we'll do a little quick tour of the market. The market was a little boring today. The market started going on an extreme rally towards the end of the day. We're short a little bit of gold. We're up a little bit on that today. We're testing that call strike. Sold at 330, 350. Is anybody else in here trading gold too? Gold's been a wild one, Gus, too. Like, gold is one of those that when it moves, I mean, that thing can move. So going to be patient in that position. We got 38 days left till expiration, though.
Yeah, gold maybe kind of overextended on the year. I mean, gold isn't generally something you trade in favor of momentum too often, but this does feel like a spot where getting short may certainly have carry some weight. I was actually just thinking about that yesterday when I think Dr. Data sent us some cool numbers about gold and gold and silver both being kind of overextended, and I was like, man, I think Errol's going to catch this move.
Yeah, no, I got a little bit of a short position on there, kind of. I think I heard Tom use on the dance floor maybe years ago, whenever the stock price was in between the strike that you sold and the strike that you bought. So I'm going to use that term, kind of on the dance floor with that one right now. Got to be a little bit more patient and let it play out. But, we got a little time on there. I'm going to throw on the RSI, the Relative Strength Index, to show when things are a little bit overbought, a little bit oversold. This isn't something I typically use. I've never been a big fan of the RSI. It was one of those things that I heard about when I was first getting into the market. I would throw it up there just to see, what it was looking like. But I mean, based off the RSI, if it's something that you like to use, we are hella overbought right now. So take that with a grain of salt. But I do have a position on in gold. And we got Google. This is an out-of-the-money call spread. We sold $5 wide. Still going to need a lot of patience on this one. Google absolutely ripping to the upside. Is everything ripping to the upside. NVIDIA tried to cool off a little bit more today. We had sold an out-of-the-money call spread on NVIDIA. We kind of just been chopping around since we put in the highs there. I'm going to be patient on that one, but sitting out of the money on those contracts. We sold a put spread in QQQ. That one's up a little bit more today just because the market's been going on a rally. That one was put on, I think, over the last few days, and then we have a longer term position on in QQQ, which is an out of the money call spread, and that one's right on the dance floor right now too. So 38 days, just going to need to be patient in that one, but I'm going to be managing that put spread that I sold on QQQ. Hopefully by tomorrow, maybe before CPI. I think CPI is going to be Thursday of this week. Maybe try and get out before then. And then RKT, one of the risks of the week. I mean, this one's almost at a max loss, and we'll just go ahead and glaze over that one. And then SPY, sold an out of the money call spread on SPY. I was able to collect about 274 on that one. 10 days left to expiration. This is one that I can manage a little bit earlier because we are sitting in the money right now. If the market doesn't sell off, this is going to be a good one to get Dr. Jim's thoughts on tomorrow, and I'm going to save it with him just so we can go back and forth on it a little bit. But I'm in a predicament because right now I can manage my losses. I can cut my loss because 10 days left to expiration. We're past the 21 days to expiration, and both of my strikes are sitting in the money. Right, things aren't looking too hot right now for this position. So with that being said, I'm going to ask Dr. Jim tomorrow at least get his thoughts on. What would you do? Would you lean to close the position, redeploy the capital elsewhere, or would you be a little bit patient since we're almost at expiration already, and maybe get a little bit of a buzzer beater move if the market wants to sell off? But nothing too exciting over here, brother. I mean, Apple was one that I'm going to be interested in for the rest of the week, and a couple other names, but that's pretty much what has stood out so far.
Yeah, I think I would be remiss if we did not talk about UNH, which it continues to recover quite nicely. This was certainly the highlight of my day today. As UNH, I am quite long calls, naked calls, quite long shares. Got me some UNH in the bag, but yeah, continue to make further legs up. There's just more and more big names that keep emerging, disclosing their positions in UNH right now, and this is I think that's a great spot. I think that this could have a ton more upside. I mean, because this is all. UNH has had this outstanding lawsuit forever, and as soon as the DOJ acquits them of that lawsuit, which I think is the most likely outcome at this point, it's dragged on for a long time, or even if they put penalties on them, we can at least put that uncertainty in the past, and I think that would cause much more upside. So any upside movement we get before that decision is made feels like just bonus dollars to me. And beyond that, too, that's the only thing that's actually legitimately, fundamentally keeping the company down right now. I understand their CEO got assassinated, boo-hoo, but it's fundamentally that shouldn't change much. You can appoint a new CEO and things will be okay with the fundamentals of your company. So it's just a very interesting spot to me. I feel like that lawsuit is the only thing that's actually for real, apart from sentiment hanging over this thing's head. And once we clear that lawsuit, whether they beat it or not, I think that this has a lot more upside in the tank.
No, I mean, this is going to be a really exciting one. So we'll wrap back around to it, keep an eye on it. We'll see how UNH digests in the market. I think the Buffett story came out a couple weeks ago. So now we're finally getting some volatility, some movement. Things were a little quiet over the last few weeks, but a really big pop today. That wasn't quiet. Anything else standing out to you before we close for today and we head into the next market day tomorrow?
No, I think that's it. I mean, it was a pretty quiet day for me, despite having numerous positions open. But UNH was the MVP.
Yeah, no doubt. We'll see what we get for tomorrow. We got PPI coming tomorrow, and then we got CPI on Thursday. So we'll be aware of that. But we will be back here on Thursday, 4:30 Central Time. Thanks for coming to take the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
We're teaching Dylan Italian here on Overtime. It's Tuesday, September 9th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. Here to take you through the rest of this hour as the futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade on the website, tastylive.com. Welcome. Tell us what you think in the chat on YouTube. We had the Apple event today, gentlemen. Dylan, we don't need to teach you Italian. Next generation AirPods will have live active translation in them. Oh, that sounds cool. So much for needing to be autodidacts in the future. We'll just have those universal translators like in Star Trek. Cool. Either way, though, that's not the big news of the day, Dylan. The big news, of course, Ilya, the job revisions, birth death model adjustments, an economy that's being overstated, 50 basis points of cuts coming next week. What a world of possibilities we entertain here. But whether or not those cuts come doesn't seem to be bothering the markets or bonds or gold, which if those cuts are coming, gold and silver certainly didn't get the message today. We have oil on the move thanks to Israel going after Hamas and Doha. Okay, that's a new wrinkle. Oil prices do come back in as the U.S. denies any involvement. And then the dollar here, quite frankly, firming up a little bit. Euro, pound, even the yen giving up its gains after rumors overnight that the Bank of Japan would hike rates at their next meeting. Volatility stays pinned lower. IVRs are dipping. I think first things first, Ilya. Yesterday on the show, we were talking with Mike Butler. We put on at least I put on the SPX Iron Condor trade, put it on, took it off, made a quick $90. Thanks, Mike Butler, for refilling my gas tank. So the market doesn't clear out the Friday high. It doesn't clear out the Friday low. We seem to be pinned here.
Yeah.
And tomorrow, perhaps, will PPI unpin us?
Maybe. I think very clearly the markets are waiting for that event risk. You see it today. Bonds don't go anywhere. Stocks don't go anywhere. Gold tries to go somewhere and ultimately ends up basically unched on the day. What's interesting, as you were saying, is that the dollar shrugged off what looked like might have tested its ranges, might have tested its bounds. The Swiss franc was the only one that had a meaningful move outside of norm, ultimately, in the wake of the soft jobs report on Friday. And you end up with a dollar that essentially resets, especially in the euro. The pound, to some extent, but especially in the euro, and also to a significant extent in the yen from that jobs report, much as stocks have now reset if you look at the S&P from that jobs report. So you have this thing now, it's a bit of a weird month in the sense that the PPI report is coming out first. Usually the CPI report, or at least in recent months it's been the case that the CPI report has come out first. It used to be some years back that the CPI report would always come in second. No more. Now it's kind of a mixed bag. This time the PPI is first, and so obviously that makes it more important because it makes for a more convincing lead-in for CPI, because that's the one that people really want to know. And if you get that one first, PPI kind of falls by the wayside oftentimes. Not this time and not recently, because the PPI data has been where we've seen the tariff inflation start to pass from wholesalers to consumers. Wholesalers were essentially defending consumers up through last month, up through July, that is, the last month of data. And in July, they pointedly stopped doing it. There was a 0.9% jump just in 1 month of PPI. Most of it was margin expansion for wholesalers, and that's them basically saying, you know what, we're going to take our cut back. We're not going to insulate consumers. You pay. And that's obviously the beginnings of the kind of thing the Fed is worried about, stagflation risk. So if this data is hot again, never mind this rate cut, that's going to happen. It is what it is. The markets know about it. It's priced in. The bigger question is what happens after. And the markets are expecting a very dovish Fed next year. Whereas if this data is hot, they're not going to get it. And your audio.
Sorry about that. Rate cuts, no rate cuts. You were talking in overtime about how the only thing that matters is inference. You seem to be locked in on the AI trade still, despite whatever else is going into the market. What keeps you so focused on this, your eye on the prize? Is it the fact that we have a NASDAQ that's beginning to break out here again? What makes you so
professional life to the power of inference and the dastardly, demonic, and horrifying capabilities that are implied by the ever-present listening and watching. The cameras and audio are in a permanent